the Faculty of Economics and Business, University of Indonesia, FEBUI, is a modern, dynamic, and welcoming campus, a place to study for the nation's future leaders. Situated in two strategic locations, Depok and Salemba, we are fully committed to contribute to the development of knowledge in economics and business, and to nurture future leaders with a sense of social responsibility and the ability to address global environmental changes. For over 65 years, we have produced the country's best graduates that will potentially play important roles both in the Indonesian government and the private sector.
So my name is Thijs Hesselmans, I'm from Blanda, and one of the many things I like about Fakultas Ekonomi and Bisnis Universitas Indonesia is that the campus is really green. It's wonderful.
In the future, we are aiming to become Asia's leading economics and business learning center, which contributes to the development of Indonesia and the global community. FEBUI has three departments: the Department of Economics, the Department of Management, and the Department of Accounting, with specified courses such as
At Sunway University, we have traveled the world seeking out the finest educational opportunities, allowing you to experience a world-class education closer to home. Featuring international collaborations with Cambridge, Harvard, Oxford and the University of California, Berkeley, alongside partnerships with the award-winning Lancaster University UK, Le Cordon Bleu Paris, Alibaba Business School and Massachusetts Institute of Technology. At Sunway University, the opportunity is yours. Sunway University, truly a class above.
Okay, thank you very much. Good afternoon, ladies and gentlemen. The opening ceremony of Joint Accounting Research Symposium of Universitas Indonesia and Sunway University Malaysia is about to begin. First of all, we would like to apologize for the delay. We would also like to remind you to kindly mute your microphone during the symposium. Excellencies, distinguished guests, participants, ladies and gentlemen, good afternoon and Assalamualaikum warahmatullahi wabarakatuh. My name is Rani and I will be the MC for today's symposium. Ladies and gentlemen, we are very delighted to welcome you to Joint Accounting Symposium of Universitas Indonesia and Sunway University Malaysia. We also would like to welcome Professor Raymond McNamara, Profesor Susila Devi, Dr. Jasapi Singh, Joginder Singh, Dr. Hakan Najaf, Dr. Ho Waiki, Dr. Shenba, and Dr. Shirley from Sunway University, Malaysia, and also the Dean of Faculty of Economics and Business Universitas Indonesia, Bapak Teguh Dartanto, PhD, the Head of Accounting Department of Faculty of Economics and Business Universitas Indonesia, Ibu Dr. Ansela Hermawan, and also the Head of Postgraduate Accounting Program, Faculty of Economics and Business Universitas Indonesia, Ibu Dr. Yulianti. Ladies and gentlemen, Joint Accounting Symposium of Universitas Indonesia and Sunway University Malaysia bring together the academicians from both universities to strengthen the accounting research collaboration between the two universities. This year's symposium has a theme, Accounting Research During COVID-19 Pandemic. This today's symposium will feature general lecture and also paper presentations by Universitas Indonesia and Sunway University accounting lecturers and doctoral students. Before we begin, we would like to show you a video presentation from Sunway University, Malaysia. Maybe the administrator can help us to play the video.
At Sunway University, we have traveled the world seeking out the finest educational opportunities, allowing you to experience a world-class education closer to home. Featuring international collaborations with Cambridge, Harvard, Oxford and the University of California, Berkeley, alongside partnerships with the award-winning Lancaster University UK, Le Cordon Bleu Paris, Alibaba Business School and Massachusetts Institute of Technology. At Sunway University, the opportunity is yours. Sunway University, truly a class above.
Okay, thank you very much, Sunway University Malaysia, for the video presentation. Excellencies, participants, ladies and gentlemen, we are now going to listen to the welcome speech delivered by the Dean of Faculty of Economics and Business Universitas Indonesia, Bapak Teguh Dartanto, PhD. Ladies and gentlemen, please welcome Bapak Teguh Dartanto, PhD.
Thank you very much. Good afternoon for the MC for the time. To the honor Professor McNamara, Head of the Accounting Department, Sunway University, Professor Hato Susela Devi, Director of Center for Accountability and Governance Research, Dr. Ansela Hermawan from Universitas Indonesia, Head of the Accounting Department, distinguished colleagues, ladies, gentlemen, and symposium participants, good afternoon. Assalamualaikum warahmatullahi wabarakatuh. It is a great honor to have the opportunity to say a few words before starting the symposium. On behalf of Universitas Indonesia, Faculty of Economics and Business, I would like to welcome all of you to the Joint Accounting Symposium of Universitas Indonesia and Sunway University with the topic Accounting Research in the COVID-19 Pandemic. It is our great pleasure to host this symposium. As we know, the pandemic COVID-19 has brought shockwave to various aspects of including the education. Many universities are conducting their activities online as it is difficult to conduct a face-to-face learning because of the cases. Research as one of the pillars of the university is also impacted by the pandemic. Apparently, the pandemic of COVID-19 has disrupted the methodology to conduct education and research. On the other hand, the pandemic provides researchers, especially in the accounting team, with the emerging research topic around the interrelatedness of the accounting role, accountability, pandemic, and the post-pandemic recovery. Hopefully, the COVID-19 pandemic could trigger the development of high-impact accounting research that not only contributes to the enrichment of the academics literatures, but also to well-being of the society impacted of the pandemic. I myself conducted several research on this issue related to the economic recovery and how the government responded to these shocks. Therefore, to encourage the development of the high-impact accounting research, Universitas Indonesia and Sunway University Malaysia organized this joint accounting research symposium. That this symposium is also expected to increase the collaborations between academics in the two universities. The collaboration is now the new, very, very important thing in the current situation. Distinguished colleagues, ladies and gentlemen, and all participants in this symposium, the students and faculties from the both university will present their papers, and the faculties from the two universities will discuss their papers. This discussion is expected to enrich, to improve the quality of the paper. And finally, the paper presentation and discussion in the symposium is also expected to be a sources of the inspiration for accounting academician who attend this event, or also for all the students, maybe the get benefit from the participating this symposium. Finally, I would like to thank Dr. Ansela Hermawan, Head of Accounting Department, Dr. Julianti Abbas, the Head of the Graduate Program in Accounting, and all of the committees from the Universitas Indonesia. I also thanks to our colleagues from the Sunway University, Prof. McNamara, Head of the Accounting Department, Professor Susila Devi for the Director for Center for Accountability and the Governance Research, and the organizer of the symposium, Dr. Semba, Dr. Kakan, and the discussion, Dr. Hu Wai Ke, Dr. Jaspal Singh, Dr. Eng Sirli, and the paper presenter is also Dr. Seba, Dr. Kakan, Mera, and Kuldep for all their contribution to this symposium. Lastly, let me also thank all of the participants. As always, we appreciate your support and look forward for your contribution to the discussion. I wish you all a most enjoyable and productive symposium. Thank you. Good afternoon. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Thank you very much, the Dean of Faculty of Economics and Business Universitas Indonesia, Bapak Teguh Dartanto, PhD, for the welcome speech. Ladies and gentlemen, we will also going to listen to the welcome speech delivered by the Head of Accounting Department, Faculty of Economics, Universitas Indonesia, Ibu Dr. Ansela Hermawan. Without further ado, I invite Ibu Dr. Ansela Hermawan to deliver the welcome speech.
Thank you, Rani. Good afternoon, Prof. Susela, Prof. Ray, Pak Teguh, Dr. Shenba, Dr. Kakan, and all our colleagues from Sunway University and also from Universitas Indonesia, and maybe also from other parties. I think this is a very good opportunity for us because we have planned this event well, especially I and Prof. Susela really have discussed this event maybe since the end of last year, but then I think we can realize this after the Idul Fitri holiday. So I think this joint research symposium, this one is our third event because we have done this, I think, almost every year in a row. And this is the third year that we have done this kind of joint research symposium because we think this event is very effective and really give all the participants, especially students and faculty members, to have the opportunity to listen and then also to see the opportunities and update research for in accounting area. So as Pak Teguh mentioned previously, that after this symposium, we really hope that we will have a more intensive collaboration with Sunway University. So our faculty member, our students, hopefully can have research together with the faculty member from Sunway and also the students from Sunway University. So without further ado, I would like to say thank you to Dr. Yuli, Dr. Shenbar, Dr. Kakan, and all the organizing committee to make this event happen, even though we all are still in the pandemic situation and all the meeting it will be still virtual. So the event will be held in 2 days. Today and tomorrow. So I really hope that everybody can really stay, not just today, but also until the end tomorrow, because we have a lot of good papers and also we have good speakers, Prof. Ray himself, and then also Bu Desi from UI will give the talk tomorrow also, and also we have papers that will be discussed from both university discussion. So hopefully this will be a valuable event for you all, and have a nice symposium for these 2 days. Thank you. Back to Rani.
Thank you very much, Ibu Dr. Ansela, for your welcome speech. Ladies and gentlemen, we are now moving to our next agenda. That is to hear the lecture delivered by University of Sunway, Malaysia Business School, Head of Accounting Department, Professor Raymond McNamara, with the title Event Study Research Revisit. This session will be moderated by Ibu Dr. Yulianti Abbas. First of all, I would like to read Ibu Yulianti brief profile first. Ibu Yulianti Abbas is currently a faculty member and the Director of Graduate Program in Accounting at the Faculty of Economics and Business, Universitas Indonesia. She received her doctoral degree in Public Affairs from the O'Neill School of Public and Environmental Affairs, Indiana University, Bloomington in 2017 under a Fulbright Fellowship. Her research interests are in the area of taxation, government accounting, and public financial management. Without further ado, I would like to invite Ibu Dr. Yulianti Abbas to lead this session.
Okay, thank you very much, Rani. Good afternoon, everyone. First, I would like to say welcome and thank you to all of you for joining the symposium today. So our honorable guest today is Professor Raymond Patrick McNamara from Sunway University Business School, who will deliver a lecture titled Event Study Research Revisit. So we know that lately there have been like various events related to COVID-19, such as the spread, the containment of the disease itself, and some related like government policy and regulation, not just, you know, in like more developed countries, but also in developing countries and all over the world. So this event study approach will, you know, particularly be very useful for you to do research and explaining the effect of these events. So yeah, I know you cannot wait for the talk, but I would like to briefly introduce Professor Ray. So like, you know, Pak Teguh already mentioned earlier, Professor Ray is the head of the Department of Accounting from the Sunway University Business School. His teaching area is in auditing, financial analysis and valuation, and accounting information system. And his main research interest is in corporate governance. But you know, you can look up his profile, and he's done research, particularly in a lot of areas in accounting, not just corporate governance, but also like finance and like financial accounting. And Professor Ray also did research on financial crisis, which is, I think, he probably had a lot to explain about, you know, like this event studies, since he's been doing research in financial crisis, and now we are in another crisis, the pandemic. So I think we will all learn from him based on his talk today. Okay, so before the lecture, I want to remind everybody to turn off your microphone. So if you have any questions, we will have a Q&A session at the end of this lecture. And you can post your question to the chat box, and then we will discuss them during the Q&A. Okay, without further ado, Professor Ray, the time is yours.
Thank you very much. I'll just share my screen. And,
yes, just go ahead.
Here we go, screen 2. I have several screens here, so I've set the camera up, so I'll be looking at.
It looks great.
What we're presenting. Thank you very much for your kind words, and thank you very much from the University of Indonesia for helping to organise this program and inviting me to give a little talk. I'm most pleased. Normally when you go to conferences, if you get 20 people at a session that you do, it's really good. If you get 50, it's fantastic, but to get 100 people here is really quite impressive, and it's good to see the focus of people at both universities in terms of looking at what they can do in research. So I want to have a look at event study applications, and we'll look at the methods and analysis, and I'll talk about some of the areas in which we can apply it. But it's been 53 years since Ball and Brown did the first event study in 1968, and and I was young at that stage. I don't know why my screen is moving forward. I didn't actually put on a timer on it, but we may have to correct those as we go. But it was that research that launched accounting research as we know it today. Prior to the 68 study, most accounting research was normative research that told you how you should do accounting, but without any empirical basis for saying that what you should be doing is what the market wants you to do. So that's really the interesting thing. The event studies morphed from straight event studies that we're going to talk to today to earnings response studies, where one of the things that we have to do is try to predict what the event is going, what impact the event's going to have. And the study that Ball and Brown did looked at the impact of accounting announcements, so the profit announcements on the share price. That moved sort of some 10, 15 years later to people using analyst forecasts as the measure of what the information should be. And the variable that we got from that was the difference between the forecast and the actual, and that's ratio data. And people were able to then regress those differences on the share price and work out the impact of accounting information a little bit more precisely. But this is still a valuable area of research, and it still has lots of applications. So I want to start with an overview of what an event study is. I'll have a look at some of the applications. And so there are applications in accounting, there are applications in finance, there are applications in governance, but we can also use them in the classroom to do projects for students that I'll discuss this in a little bit later, but helps to motivate the students in their study of accounting, helps to show them that what they're doing has meaning to the market. So one of the things that we face as accountants is the perpetual snipe from our friends in finance that say the market responds to cash flows, not accounting information. But in fact, all the evidence suggests it's the accounting information the markets respond to. And our theories in finance are about expected cash flows for the future, not actual cash flows. And there's plenty of research evidence that's showing that the best surrogate for expected future cash flows is in fact accounting information. And in fact, there've been a number of studies that break accounting information down into the cash flow component and the accrual component. And that accrual component is statistically valid for influencing the share price. Then we'll have a look at the statistics that we have to do and some of the issues of putting this into practice. And there are quite a number of those. So what's an event study? It's an attempt to determine whether a particular event in the capital market or in the life of a company affected the company's stock market performance, its share market performance. It aims to separate company-specific events from market or industry-specific events, and has often been used to also provide evidence for and against market efficiency. So there's a wide breadth of applications for event studies, but the key thing is to find something, and it can be an announcement like an earnings announcement, it can be a dividend announcement, it can be an announcement of contracts that the company has been able to achieve, or an event. It may be specifically what's the impact of having to, for example, capitalize what was operating leases. We can use an event study to see the impact that has on particular sectors of the economy or particular markets or particular industries. So it has a wide application. And what we're really looking at is, did the event or announcement cause an abnormal movement in the share price? The abnormal returns are calculated as the difference between the share's actual return and what we would have expected from it. And there are a number of ways we can come up with that expected return, and I'll return to those later on. But the difference, right, is the abnormal return or residual. If abnormal returns are random, then when we sum them, they should keep returning to zero. So the cumulative abnormal returns, the little bits left over that aren't our expectation, should continue to return to zero unless the event has value relevance for the share price. in which case, if we graph the returns, and I suppose it probably wouldn't hurt for me to share with you an example of one of those, if I can get my mouse over to. One of the troubles with working with multiple screens is that you, I'll pull this over onto our screen so we can have a look at it. This is a plot, the orange there, I think it's orange. Now, I'm colorblind, so colored graphs are always difficult for me, but I believe that's an orange color. This is the plot of the earnings announcement of JB Hi-Fi, which is an Australian electronics retailer. It's also in Malaysia. And we've compared it to its competitor, which is the blue, I think it's blue line here, which is Harvey Norman, which also operates in the electrical area, but in other areas as well. And this was the announcement of the information. So we can see the residuals when we take away the share return from the price up until the announcement, we're bouncing around the bottom line, which is the 0 mark. We can see that Harvey Norman also kept bouncing around that bottom line until an event impacted them a little bit later on and their residuals have grown. But at the time of the announcement, we can see there was some anticipation and the returns went up, and now there's a new 0 that the returns are bouncing around. So that's the that sort of explanation we're getting down the bottom. If those little bits, those extra bits of return are non-random, or if they're random, they will keep summing to 0. If they're non-random, we will see that jump, and we can do some statistical tests to see whether that jump is significant or not. He says as he looks for his mouse. So essentially the general model that we're looking at here is there's earnings announcements or some business related announcement. There's other information out there in the market, and that goes into the decision-making models of people who are in the marketplace. And the result is a cumulative reaction that's either positive or negative if that information is relevant. And that's the bit that we're trying to test. We're dark here as to what that analysis, interpretation, and valuation that people in the markets do. We're not trying to explain how that happens. We're just trying to explain the effect of some accounting information on the market's performance after taking away what we would expect to happen. And of course, we know that there are other information, and they're the things that we need to control for when we're trying to make some sort of prediction or some sort of conclusion about the effects of that accounting information. So that's just the overview of the event study. I want to have a look now at some of the applications of the event studies, then we'll go into the methods, the statistical analysis, and putting it into practice. So we can use the method to examine whether a specific event or announcement has had an impact. We can apply it to a portfolio of firms who are experiencing the same event, in which case we talk about the cumulative average returns as opposed to the cumulative residuals. And it can be applied to a single company, but that's not without issues, and I'll return to that. And it can be used as an effective educational tool. So we've got all of these applications that we can use our event study for. The more significant published work is in this area of collecting a portfolio of firms who've experienced the same event and comparing it to a portfolio of firms who have not experienced the same event or who have experienced a different form of the event. So that's really this is the main area where studies have been done. This area, applying it to a single company, is where you can make money. Certainly, there's a lot of calls in the legal profession for accountants to come forward and show that a particular action taken by a company has been detrimental to the shareholders of the company. And I'm going to come back to one of those at the end of the project, which we did and which I haven't published, and I'll explain to you later on why I haven't published yet. And really the reason is I'm a bit frightened to publish it just yet. And that's because it suggests that perhaps the actions taken by a fairly well-known company were in fact not in the interest of the shareholders, but were part of ensuring that management would receive its bonuses in the future. We'll come and talk about that a little bit later on. So I thought I'd just cover the things that you might be looking at when you're looking at accounting. So we can look at accounting announcements. In many jurisdictions, the accounting announcement and the dividend announcement are made at the same time. So we can't really separate those. Ball and Brown didn't try to separate it. The dividend announcement was just a given and it was considered to be other information. One could have easily have argued that the dividend information was really driving the result as opposed to the earnings information. The fallback for that is that Modigliano and Miller say that dividends have no impact on the value of a company. And yet there's been an accumulation of research that shows that dividends do have an impact. Firms that pay dividends going into a recession perform better. Firms that pay dividends coming out of a recession perform better. And we do know that firms who change their dividends get punished by the market. So if you're doing something like an earnings announcement, you need a very controlled experimental design. So you might separate all of the companies that are doing that accounting announcement to those in which the earnings went up and the dividends remained constant. Comparing that to companies where the earnings went up and the dividends went up, or the earnings went up and the dividends went down, and then comparing it to companies where the earnings remained constant, but the dividends went up. And when you keep going on the possibilities and combinations of earnings and dividends, we find that it is the earnings that are driving the result. It's the earnings component. You can look at components of earnings themselves, like sales contracts. You can look at areas like reconstruction, where the company decides to take a provision for reconstruction, and therefore that hits the profits for the year. Many of these sorts of things, particularly in the reconstruction issue, are really associated with, I think, what we call the big bath. If I'm a new CEO coming in, what I want to do is take a big bath in my first year. That is, try and write off as many assets as I can so that I reduce further depreciation, try to bring forward as much expenditure as I can so that in later years the earnings are stronger and the bonus that I'm looking for are assured. We can look at the impact of a new standard or changes in standards and how they impact the market. So, for example, many years ago, when they brought in the depreciation of buildings, there was concern amongst the profession that this would dampen profits and have an impact on the markets. Event studies were done on the impact of the depreciation on buildings, and it was found to have no effect. The market just did not really respond to it. So you might ask, should we have done it? It's an interesting question, but we still do it now. But there doesn't seem to be any impact of that. We can look at the various impairments of assets to see whether impairments of a certain character have an effect that don't happen in other industries. Now, a colleague of mine wanted to have a look at impairment in the mining industry. And the trouble with the mining industry is it tends to be excluded from most forms of normal academic or accounting research. And the reason for that, I think, and it's just my own personal theory, is that the valuation of mining companies follows a different process to the valuation of your standard company. So the valuation of a normal manufacturing or retailing company, we think about it as the discounted future expected cash flows. But for a mining company, for example, the difference in value between a piece of gold that's under the ground and a piece of gold that's on top of the ground is in fact the cost of getting the gold out of the ground. And there's a valuation method that was brought up or was developed by Harold Hotelling back in the 30s. His model that he developed was to actually explain why mining companies will always extract the optimum amount of ore in a particular time. But that's been revamped now into a valuation model that says for mining companies, the main driver of the value of a company is the reserves that are in the ground times the spot price for those assets, if it was gold, less the cost of extraction. And that seems to have some currency. So it applies in a lot of areas. the mining industry is an area where we have to look really carefully to see whether the event study method is going to work. And of course, it applies to the introduction of new technology, for example, enterprise resource planning systems. It was really fortunate for us in the year 2000 when there was the fear that the 2000 bug, which was the fact that all systems written before 2000 only expressed the year as two bits in the, or two digits in the accounting systems. And most systems check to make sure that today was a later date than yesterday. So when you got to the year 2000, when they were checking anything in 1999 compared to 2000, 2000 would have come up as being not after 1999 because they're only comparing the 00 and the 99. So there was a huge introduction of new technology around 2000. And one of my PhD students did an event study that, amongst other parts of his analysis, that showed that the introduction of ERP systems, that's enterprise resource planning, takes about 3 or 4 years to pay off. But the market in event studies has an increase in the price at the announcement that this new technology is going to be introduced, and then has a negative effect later on when it doesn't produce results for a few years. So that's accounting. Of course, we can do it in finance, and mergers and acquisitions are a particular area of interest. We can look at share rights issues, stock splits, dividends and share buybacks. As a matter of fact, for a one company event study, there's a company in Australia called Telstra, which is the major telecommunications company. And Telstra was trading at about $6 a share, and they decided to do a share buyback. But what they decided to do was a Dutch auction. So I don't know whether you're familiar with the Dutch auction, but a Dutch auction is where you start at the top and the price goes down until somebody buys. So in a normal auction, people make a bid and people bid the price up. In a Dutch auction, what they did was start at $6 a share and say, we will buy back shares at $5.80, $5.40, $5, $4.50, $4, $3.50. And they said, you can nominate what you want to sell to us at those prices. Well, of course, nobody's going to go for the $3.50, but the market response was, here's management saying that the value of this company could be as low as $3.50 a share. And that's where the share price ended up after the share buyback. And so that would make an interesting event study to show the impact of using what I think was the most ridiculous method of buying back shares. You can use them to look at debt financings. You can use it to look at the ratings changes by rating agencies such as Moody's or Standards and Poor's. And you can use it to look at business restructuring and how that impacts on the share price. So these are the whole issues that you can use. The mergers and acquisitions brings up a particular point that we're going to come back to later on, and that is, when did the market become aware of the event? When a company makes an announcement that they might take over another company, is it the date they make the announcement that should impact the price? Is it the date in which it's completed? Is it one of the many changes that go on between the announcement of a merger and the final settlement price? Because when companies come in and offer shares in a company, offer to buy the shares in a company, other contenders often see the bargain that might lay there and come in and do counter-offers, so the price gets bid up over time. So interesting area to look at if you're interested in the finance area, and you can do cutovers between accounting and finance in that area. And then there's the governance applications. We can look at the change in boards, so the removal of directors, the appointment of directors. Nobody's looked at it, but did companies who appointed a female director have a positive reaction? There's a lot of research out there that shows that the boards with more female members perform better. Now, I can't see the rationale for that, and it's not a sexist thing, but the only reason they would perform better is if women were smarter than men. And the research in psychology says that there's no difference in the intellectual ability between men and women, except in one area, which is men are supposed to have better spatial reasoning. That is, we can pack the car better when we're going on a holiday, but that doesn't seem to be a criteria that ought to apply to appointing women to the board. And one of my students who came back to do a PhD, she's actually Malaysian, did an extremely good study on the impact of females on boards and firm performance. And the problem that we have when we do any study like this is the endogeneity issue. Do companies who are more in tune with their market, with the society in which they're in, perform better and therefore know to put females on boards? Or is it females on boards that cause the company to perform better? So it's quite an important experimental issue in dealing with that. And what my student did was that she used another variable, I forget the word will come to me in a minute, but an instrumental variable, which would be associated with the fact that society prefers better gender equality, but not associated with the performance of the firm. So she looked at the number of females who were on local councils. And when that variable was put in, there was no increase in performance when females were appointed to the board. And she was devastated by that. But I said, but there was no decrease in performance either. So there was no change in performance, therefore there is no basis for not having a female on the board. But the interesting thing is that's a sort of a longer term return, and nobody's looked at whether, use an event study to see whether the market responds better to a company that is demonstrating it's in tune by adding more females to the board. The other area in that concerns me is that in Australia, there seems to be a lessening, or there appeared to be a lessening of what was called the glass ceiling, the thing that stopped females from going up the ladder. But one of the things that are worrying me is that there's been a whole pile of events where women were promoted to CEO positions, boards of directors and chairmen of the boards in companies that were going to be in trouble or were in trouble. And so, for example, the chairman of the board and the CEO of one of Australia's top banks, they were forced to resign after the government, the Royal Commission into the banking industry in my country, which showed that our banks performed absolutely appallingly, I might add. And as the heads of the organisation, they were forced to resign, even though those problems in the organisation were things that were occurring before they joined. So, for example, I think one of our banks has 70 million charges against it for money laundering. And that's a lot of money laundering defaults by that company. Another bank, the biggest of the banks, it has 30 million charges for that. So our banks have behaved fairly badly. And we could use an event study to look at those, to look at the impact of females on the boards and the impact of the bad behavior of boards. We can look at the appointment or removal of CEOs, whether it's voluntary or or forced. Does that make a difference? Whether it was expected or unexpected, whether the person had indicated that they were going to retire. We can look at the impact of regulatory action. And when I show you that example a little bit later on of an event study that we've done, you'll see the impact of regulatory action can be fairly significant. And then there's an area that we're looking at the moment, which is where firms breach their social responsibility. So we're collecting data on companies that have behaved badly. So it's the big four Australian banks, there's no doubt about that. It's Apple giving its data to Cambridge Analytics, McDonnell Douglas, who misled both the regulators and the public on the safety of their aeroplanes that were crashing. Domino's Pizza, which I know is in Malaysia, but it's an Australian company, and they were in fact employing Indian students and paying them far below the minimum wage. And when that became public, the share price of Domino's dropped 20%. And then we have 7-Eleven, which you're probably familiar with as well, the corner grocery stores, did the same thing as Domino's. So we're collecting those to see, just to demonstrate that breaching social responsibility has an impact in the market. But there are lots of examples of that you could do. And the other area that we can look at is the application of event studies in education. So we've done it both as a simple first-year motivational project and as an advanced accounting theory type project. What we do is we just, for example, in our first accounting course, this is another university I worked at. I haven't imposed it on my colleagues at Sunway yet, but at Bond University, the students were required in the first 4 weeks of their first course to find an accounting event and do a little event study. And what they did was collect the All Ordinaries Index, collect the share price, which you can get from Yahoo for both now, and just use the market return as the measure of the expected return. So take the market return away from the company return and plot the residuals and tell us whether the accounting announcements make a difference. And we find in a lot of cases that we do. And the thing that it does is that it motivates the students by making them see that what they're doing makes a difference. It's important. It's why it's regulated. It's why it's always been done. It's why companies are required to do it, because it's meaningful to the market. It also has other good educational things. They learn about scale. You know, why do we calculate a return? Because a 10-cent increase in a 100 ringgit share is not the same as a 10-cent increase in a 1 ringgit share. So we calculate returns so that we're adjusting for scale. And we get them to think about causality. And why do we take away the market return? Because the market moves all shares. And what we want to do is to ensure that we take away the effect of other things in the market from the share price. Now, it could be that the changes in the residuals in these studies are due to industry effects. So we also get the students to collect the data on two competitors and plot the residuals. And that's really what I showed you before. This is, in fact, when I get my mouse back over and grab the file, bring it back. This is the residual analysis for a single company earning announcement that the students did in their first year. We don't actually get them to do regressions and estimate the beta. We simply take away the return of the market from the company and plot our residuals. And this is what you get. As I say, easy to do, pretty easy to mark. We also have a spreadsheet template that enables us to mark it easily, and the students can see the impact of the accounting announcement. So that is a first-year study, or actually this one was actually a third-year study, because in our accounting theory class, we would get them to estimate this. I'll come back to this slide later and show you how we estimate the expected return, how we calculate the residuals, and how we plot those residuals. So all of this comes right back down here. Sorry, I went too far. Should be to here, which was the announcement date for the company. I've actually hidden all of the calculations between 31 and 263 so that you'll be able to see. But we'll come back to this and I'll explain it in detail, the practicalities behind that. So they're the areas that you can apply an event study to. He says looking for his mouse, which has disappeared. There we go. This is an example of one that we actually were running an MBA program in Japan, and this was one from the Japanese students there that looked at McDonald's versus other food areas and their announcements. So that was the announcement. We can see here there was a lot of leakage before, so most of the information was already in the share price. And that's what Ball and Brown found in their first study, that for things like accounting information, a lot of that information is already in the share price before the date of the announcement. And why does that occur? Well, because you've got half-yearly and quarterly reports in some jurisdictions. You've got briefings that the CEOs give to the market. It used to be that the CEOs gave those briefings to, at least in Australia, to analysts, but the regulator said you should not be giving that information to analysts and not to the rest of the public. So all of the briefings that the company gives, so they might come out and say, they give profit warnings, we're expecting the profit to be lower or we're expecting the profit to be higher. So that's an example of the residual analysis for McDonald's. This is one where this was the announcement and there was no real difference between Rio Tinto, which is a mining company, and BHP, which is a mining company. BHP Billiton is one of the largest in the world. They did an announcement here, but you couldn't say that this announcement was any different to what was happening with Rio Tinto's data. So this is one where, as I say, things are very difficult in the mining industry because miners really have to tell us that they've had an increase in reserves or there are significant increases in the spot price for the commodity that they're talking about, which we find is the case in the oil industry, which would be of interest to Indonesia. So you could work there. And I thought I did have another one. The other thing that can happen is we have a profit announcement and we expect the share price to go up and the cumulative residual goes down. Or we have a profit announcement of a significant reduction in profit and the share price goes up. Now, this can occur depending upon what the market's expectations for what is happening. So if your competitors have come out and they've all done badly, the market expects you to do badly. But if you don't do as bad as your competitors, you'll see a jump in the share price because they will have factored in that pessimism. Similarly, your price might go up, but it may not go up as much as your competitors. And therefore the market's expected you to do better and you've done worse than they expected. Therefore, they penalize you and your residuals go down. So it's never a black and white analysis here. We have to think through what are the implications of the announcement and try and get information around the event time to see what the expectations of the markets were. So that's our event study expectations. I'm planning this to go for 40 minutes so we can then have question and answers and talk. So I think we're on track. In terms of the methodology, first, you got to identify the event. And the real key is when did the market first become aware of it? Then we need to model the share price. And that generally involves some expectations model, how we're going to come up with that. And I'll deal with each one of these individually. We estimate the excess returns, which is pretty easy. It's deducting the expected return from the actual return. And we organize groups or organize and group together firms with excess returns. So we try to get a portfolio of firms who are all experiencing the same event, but they may be experiencing over different time periods. And then we do statistical tests to analyze to see whether the cars are different from zero. So this is in fact the event timeline. So this center bit here is the event window, our start time and our end time. It's usually 3 to 10 days. If we're looking at daily data, it can be half a month to a month, and we're looking at monthly data. So we use the data in this window in conjunction with our estimates. And here I've just filled in that we're going to be using the capital asset pricing model to estimate what the expected return is. We'll see whether there's any information leaking. And this post-event period tells us whether there's any more change going on. This first part is the estimation window, where we use it to arrive at our expectation for the share. Are we better? Can we hear me now?
Yes.
Yes, so good. I thought maybe you were getting bored.
Yeah. Somehow you just get like muted before. I don't know why.
No.
But you're good now.
Oh, good now. Yes. So we use this estimation window and we can take the average return for this period, simplest model, take it away from our returns in the event period. We can use the capital asset pricing model, or we can use other ones. And I'll come to those in a little bit detail. The thing that's of issue is that in a single event, all observations are subject to a common set of exogenous contemporaneous influences. In the studies of event types, where we're looking at sort of like a whole pile of companies that have had positive earnings announcements versus a whole pile of companies with negative, then that's going to be distributed over a number of calendar times and a number of years, and there tends to be an offsetting of those influences. So that makes those sorts of studies a little bit more robust. So let's go and have a look at what we need to do. Given that we've identified the event, we can use the mean adjusted returns, which is using the mean of the company estimated during the event period. And Brown and Warner have found that the adjusted returns was just as robust as the CAPM methods. But when you're looking to publish something, they expect you to use a little bit more sophistication. So using the actual market return as a measure of that expected return is what we do for the students. So this is using the mean of the company. This is using the market return, so the return on the index, and we use that, tend to use that for student projects because it's easy and they're able to do it. Or we can have risk-adjusted returns, so we can use the capital asset pricing model, or we can use the Farmer-French multi-factor model. I've not used the Farmer-French model. It's not something that I'm keen on, but I did review a paper just recently where they'd done an event study using the Farmer-French multi-factor model. And I actually accepted the paper because everything seemed to be quite good in terms of what the researchers had done. Other issues that we need to look at is it's important to ascertain the timing of the event. So when we're looking in finance, when did the takeover occur? And I've already alluded to that. And we need to see whether there are any confounding events. And I've spoken to a little bit about that when we're talking about dividend announcements versus earnings announcements, those things that happen at the same time. Now, I believe in the Czech Republic, those two announcements are different. So I don't know whether it's still the case, but I did some work in the Czech Republic. 1997, I think it was, and a long time ago. And that was one of the things that stood out there. And it was always in the back of my mind that it would be interesting to do an event study there because we could see the differential impact of dividends versus earnings announcements. But it was quite amusing at that time. Companies in the Czech Republic, when they held an annual general meeting, would distribute the annual report to the people at the meeting and then collect it afterwards because they didn't want their competitors to know what they were doing. And what really happened is the Czech stock market just kept tanking in terms of its value because people didn't have any information to make a decision on. I'm sure it's not the case now. For some strange reason, that went back to what it was. So I'm assuming you're all familiar with the CAPM, which is, when we're trying to get our abnormal returns, that should have been a minus, sorry. That should be a minus there, not a plus. So the actual return minus our expected return. And we get that from the predicted alphas and betas that we get in doing our estimate. So the estimation window is usually one trading year, 252 days. Some of the researchers suggest it can be low as 126 days or less than that. If you use less than that, you tend to get problems with the issue of your analysis. So what I thought I might do at this point is bring over the application of that. So this is the raw data that a buddy of mine gave me, which is basically from Bloomberg. Just out of interest, do you guys have access to Bloomberg at all? Because if you do, I can give you some templates that enable you to download this information almost automatically. It makes event studies blindingly fast and incredibly easy. And in addition, Bloomberg already calculates the betas. So you actually don't really need to go through this process, but you can go through the process. And I think it's always good to do it rather than simply use stuff. So this is the raw data, New York Stock Exchange returns. There's also the S&P 500, and it was Procter & Gamble's. This is for Procter & Gamble's takeover of Gillette. So usually from Yahoo, you'll get the price and you'll get the volume, so the last price, I should say, and the volume, and we calculate the return. We've calculated the returns on both the markets, and we do the same for Procter & Gamble. And then we do our beta estimate. So I've left this spreadsheet with Cecilia to make available to you guys if you want. So what I've done at the top in the spreadsheet is that when you put the data in, right, it's automatically going to calculate the intercept for the regression for the analysis, the slope, the R squared, and the standard error. So this return is, in fact, if we go back to here, 0.004, wherever it was. Actually, I think we started the return, but this is the market return, I think, and that's the share return, 27th of January 04. Let's go down. This is all the data that we collected. '04 was the S&P 200 index, and I think this one, -0.005, was the return of the shares. So I've also done the beta estimate here, intercept 0.00681. If we go up here, home, and we go, we can see that that's the same value, right? Same slope, so same beta, and the same standard error in there as well, 1034. And so you can do this by simply going up to data and use the data analysis and use regression, and the Y range, we're predicting the return of the company. So you can see it's selected here from the market. So if we go back to the CAPM, and what I did was I left it at the 95% confidence level, and I chose this point as the output range. So when I go okay, why didn't that work? It should have. Non-numeric data. Okay, we didn't have non-numeric data before, so we'll just assume that I've got it correct. I might have put something in here by accident. But anyway, you can do that regression analysis. And if you don't have the data analysis pack on your computer, then you simply go into Files, Options, Add-ins, and you choose the analysis pack and hit Go. And that will add it in, and you can do the regressions. So pretty good. This is the cumulative residuals from the chart here. I actually did the cumulative residuals over here, so we can see pretty good earnings effect here for the company. Easy to do the regressions. So then what we've done here, so this, it contains the formula for the residual, right? So it's C63, return of the company, minus B2 up here, which is the intercept, plus B3, which is the beta, times B63, which is the return of the market. So that's how we're calculating our expected return, this second part of this equation down here. Let me just escape from that. So this is alpha plus beta times the return of the market that's contemporaneous with the beginning of our event window. And so that's how we calculate our residual. And this is just the cumulative residual coming all the way down. So this value is that value plus the previous value. And when you run it all the way down, it gives you the cumulative residuals, which we can see the plot here for them. So that's the simple way of working out the expected return using the capital asset pricing model. It's a little bit more complex if you're using the Farmer and French, and I don't use the Farmer and French because I don't understand how they've got some of the values in the models that are available from their website, and I don't like using things that I don't understand. So that's a little applied application of the CAPM. Now, I did say to you that when we go back, if you look back at that slide, the test of significance in here, and I'll go back and get it. The test of significance here is testing whether this is different from 0. Technically speaking, the test of significance should be whether this is statistically different from 1. So we would do 1 minus this coefficient divided by the standard error. But you get the same result in terms of statistics. So, but just for propriety's sake, I just wanted you to realize that we're generally testing, because the beta of the market is 1, we're generally testing whether the beta we've calculated is statistically different. So that would be the result if you did it correctly. All it does, though, is that it's taking a constant away, so it doesn't really affect our analysis significantly. Now, when you're doing this, if the dates in the index do not match the dates of the returns, you'll get a spurious result. So I don't know what it's like in Malaysia or Indonesia, but in Australia, Yahoo adds spurious dates to the index and sometimes add it to the share prices. So usually you download these from Yahoo. I think you have to sort them into oldest to newest to calculate your returns. What I always do first is put a little if statement over there that checks to make sure that the dates in the index are the same as the dates in the share prices. Copy that all the way down. So I say, I just put, if, A1 equals C1, then put a 1, I put a 0, else put a 1, and I copy it all the way down, and I look at the ones and try to work out why the dates don't match. And then generally, for example, on public holidays, I don't know whether it's that sometimes a company might have over-the-counter trades on a public holiday, or it might be registered in 2 jurisdictions, so it's a public holiday in Australia, but not a public holiday in the US. So they get some share trade on the day that doesn't match the index for Australia. So they get it on what was a public holiday. So I just delete those. So let's just go back and look at this again. You'll notice that it goes 27, 28, 29, 30, 2, 3, 4, 5, 6, 9. Goes from the 6th to the 9th. What's that? That's the weekend. So we're actually defining a return is as the time between the closing trade on one day and the closing trade on the next day. It's not a physical day, right? And so if I've got a return that doesn't match, I've got a price or return on a day that, and there's no index for that day, I can just delete that return and I'll get a return over a slightly longer period. So that helps you a bit. The other thing is, of course, these are daily returns. I will come to that in a minute. So let's just put this back now. We've covered that issue. The best thing to do is always graph the prices to see if anything looks stupid. If there's a price that's way out, sometimes there might be a stock split. You might need to have to adjust for that. So that was the Procter & Gamble one that I've already shown you. The takeover date was the 28th of January. The event window was the 26th to the 30th to the next year. And he says as he tries to get his mouth back and bring it forward to you once more, I use the count number here to make sure that the period that I was going from, which was the 27th down to the 25th, was in fact 252 days. So you have everything in there that you might need. We talked about our estimation window. That's how we calculated the betas and alphas. Now, you'll also notice that the alpha in there was not statistically significant, but everybody still tends to put it in the equation, you know, when they're estimating the expected return. Not statistically significant, what means that alpha is not different to zero, but people always put it in, so I put it in for you. You can calculate the betas daily, weekly, or monthly. The longer the time period, the more stable the return. The trouble with monthly returns, whoops, he says as he goes back, the trouble with monthly returns is there's a, what's the word? Some conventional wisdom that says you should have at least 60 observations for the regression to be reasonable. I've never found out where that was ever said. And I asked Robert Pfaff, he doesn't know where it's been said either. So I don't know, but that's the sort of thing that people go by. So if you've got monthly returns, you're looking at 5 years of data that you've got to collect. And it's unlikely that the company is the same company now that it was 5 years ago. So you may be incorrectly estimating the beta. The trouble with daily returns, and it becomes a particular problem if you've got shares that are not traded very frequently, you get what's called the intervalling effect. So I used to be the finance director of one of those companies. You know, we might trade, but our last trade might be 2 o'clock in the afternoon, and the index will be a particular value at that point of time. But we don't trade anymore. We didn't trade anymore till the close of day, but the market has changed. So you're comparing a market index at the end of the day with a 2 o'clock index for our share, and that causes a bit of a problem, and you get non-significant betas when you have that problem. And there's an adjustment for it. I can't remember the name of the fellow that did it, but if you really need to know, I can look it up and find it out. Or you can just go to weekly returns or monthly returns. So those will be better. The next thing is choosing the index. We essentially what we're doing is we're trying to say that we're taking away the market. Now, the market consists of human capital, shares, cars, property, everything. We use the share price index, the market index, as a surrogate for that. You can use the S&P 200. You can use a bigger index. You can use the FTSE 1000 or the FTSE 100 for your thing. It doesn't matter much which one you use, and calculate the return. And you can, or you can go back to the capital asset pricing model and just say, I know the beta, I'm going to use a spread on the market of say 6%, between 6 and 8%. So they say that risk premium on the market is between 6 and 8%. And if you go to the SSRN, that's the Social Science Research Network, ssrn.com, and you put in a search for a paper by a fellow called Fernandez. He does these regular publications on what that premium is. So for the Australian market, it's about 6.25. But you could use a 6 to 8 spread in that, and it's not going to make a lot of difference to your result. So they're the ways in which we can estimate the market return. This is...
Sorry, your time is 10 minutes.
Okay, I'll finish almost right now. This is the Yahoo reference for getting the index for Malaysia. Don't use a industry index. So this is the plot of Wendy's International, which is the big donut chain in the US. And this is the restaurant index. And you can see they almost follow each other. Whereas this is the S&P 500. You're not getting the market effect here, because Wendy's is a big contributor to the index. So don't use market indices for them. This is one that we did for Tesco, the one I told you about that I haven't published yet. There were a whole series of events that started with the publication of a key audit matter, which said the auditor spent most of their time on a particular area. These are the events. So this one said, we go back there, profits were overstated. And this was the announcement of a write-off. So that was already expected and the price was already down there. But you can see the competitors are also going down. So it's hard to know whether this was a statistically significant effect. This was a report that profits had decreased by 55%. Wasn't as bad as they thought, and they got a bit of a kick in the price. But then it tapered off. But that taper off is with the rest of the market. This one, I think, was 3 execs were charged with fraud. And I forget what this one was, but it didn't have much of an effect. The 3 execs charged with fraud. Those 3 executives were exonerated and the courts found there was no fraud in Tesco. And when we did an earning management study, we found that Tesco did not use excess accruals. So it would suggest that the new CEO that came in here took a big bath to get his dividend. And he's got more money than me, and it's why I haven't published it, because I think he'll sue me if I say he's done that. So results, think carefully about what the results mean. And I always like to see the graph of the cars. So we can conclude that the event studies, they have their role, and that role is still there in terms of research. So lots of areas where it can be applied, particularly in governance, and you can get some publications in the management literature, I think, by doing that. It's relatively quick and easy to apply and easy to interpret. And if you've got Bloomberg, it's even faster to do. And I just think it's fun to see the results. If you get your students to do these in things like the first year, it's fabulous for you, because when I was teaching first year, I knew more about the companies in the Australian share market than practically any analyst there, because the students were bringing along anomalies for me, things that kept me up to date. So I would encourage you to include it in your courses, and I'll forward this to Cecilia. But this is a paper we did some time ago on integrating research into the accounting curriculum, and it's about doing that event study. So we can give you the paper, and I can give you the instructions to the students and all the other things that you need to make this work properly if you want to do it. Okay, thank you very much.
Okay, thank you very much, Prof. Ray. I think that's a very interesting talk. And myself, I'm really interested in, in your paper and, the guidance of teaching this event studies for the first year students. So do you mean this is like for the undergraduate level?
Yeah,
or are you the undergraduate, okay.
Yeah, we give it to our undergraduates in the place that I worked at. We used to give it to them the first year, first course, assignment due in week 5.
Oh, wow, that's really interesting. So they still like learning like debit and credit, and yeah, okay, yeah. I think we'll be like really interested in the paper and the instruction that come with the paper. Thank you so much if you can share with us. Okay, so we do have few people asking questions based on your talk. So I will just read them in order based on who asked first. So the first question is from Bu Elvia, one of our faculty at UI. So the question here is, how important is the market efficiency in the event study? So if you do like the cross-country data to do this event study, and there's like differences in the market efficiency, what do we need to consider in our model to control for that market efficiency? And then the second question, still from like Welfia, so since like there's the sensitivity of the event might be different from one market to another, how do we also like consider this? So this is talking about the cross-country data to analyze something using the event study method. Okay, thank you.
Well, that's something that we're grappling with now to try and do that governance paper on bad behavior. So we are looking at, sorry, my chair's disappearing and I'm disappearing now because I'm trying to read the questions. But the efficiency part's taken care of in the index, because we're saying that the index represents a portfolio of investments that's sufficiently diverse that everything should be taken out of it except for the movements of the market. However, if the market is not efficient, of course, then your study starts to fall into question. So I had a student who did a study in China, and if anybody wants to finish the study, because he graduated and never published it, but we looked at A and B shares. So A shares are shares that can be bought by Chinese, and B shares were shares that could only be bought by foreigners, and then it was relaxed and they could be bought by foreigners or Chinese citizens with foreign currency. And we wanted to see, because the B shares were subject to Western governance, Western accounting standards, Western auditors, Western governance principles. And when we did the study, our priors were, of course, that the market would prefer the West to the East. And it was completely the opposite. The Chinese preferred Chinese auditors, Chinese accounting standards versus the Western ones. So that data just went up to about 2010. So I'd like to continue the study on now to make it a little bit more contemporary, and probably throw in the H shares in China. So if anybody's interested in collaborating, but in an upwardly moving market like China was at the time, you couldn't use the market average or the share market average, because you would be in a market that's moving upwards, significantly understating the residual. So we use the beta estimates to do that a little bit more effectively. But that should take out the differences in cross-cultural, because you're just looking at the residual. And as long as the index is sufficiently robust, that residual should just reflect the event, and it shouldn't matter. Well, it probably will matter, because there are some countries where, for example, the one that I'm interested in, which is firms behaving badly, there are some countries where they don't care. Or it may be they don't care. We don't know for sure. So the ideal thing would be to get enough in a country to see whether the country responds, and then we'll put them together in a packet. So there's plenty of badly behaving firms in the US, so that should be easy to do. And certainly there's a plethora of them in Australia. And quite interestingly, there was a reference that Cecilia gave us just the other day of a bit of a stir where KPMG has questioned the revenue and the earnings of a Malaysian company. And it would be interesting just to do a $1 company event study to see how that impacts the share price over the next month. One of the leading independent shareholders of that company has called for the auditors to be replaced. So interesting result and interesting time. So I think you can do it. And I haven't seen many cross-cultural event studies, but I haven't really looked for them that much either.
Okay, thank you, Professor Ray, for your answer. So we'll move on to the second question. This is from Idrianita, one of our doctoral students. So the question here is, what should we consider in the sample selection? So if you determine the event window, so will that kind of determine your sample, meaning
No.
that it will be kind of like a purposive sample, or is it like some like
No,
case by case?
it's the find the event. So for example, one company's announcement may be, let's say we're looking at something like asset impairment, right? One company may do a significant asset impairment in 2020 and another company would do it in 2018. So we then find the event, and then the event window is built around that date. So you would have the data from 2018 and the data from 2020, plus all the other companies which have experienced the same event. And it's those residuals that would be put into a portfolio. And I never mentioned it, but if you're doing that sort of thing, you need a matching set of companies that didn't experience the event. So for our study in China, we matched the companies that we were looking at with B shares with A share companies. We matched them on size, assets, I should say. We matched them on industry, and we tried to match them on rate of return on equity. So there's a paper I did with a lady called Agnes Chen, who you might know, and we had a look at what was the best benchmarking company for using peer evaluations, and the principles behind that would work as well. So it's the event that drives the window, not the window that drives the event. Does that make sense?
Yes, I think she said yes.
Okay.
Yeah, I can see her video. Okay, so this is the last questions. So we kind of go a little bit over time, but I think that's okay, because it's a really interesting discussion.
It's my nature.
Yeah. So so this is from Mr. Muhammad Sazwan. I think he's a fan of yours. He mentioned 2 of your papers, and then he's asking some additional question, maybe ideas about the same topics. So referring to your 2012 and 2019 papers that yield some variables that can improve the company performance. So this Mr. Muhammad Sauzan asking, what about that role that shareholder activism, how investors can play a significant role influencing company performance, especially minority shareholders during the financial crisis will kind of like impact, or can you also consider that
Yes, I can. As a matter of fact, I've been on the receiving end of that. I was the finance director for a company, and we had a shareholder that wanted to get rid of the board without actually going through the process of buying other people's shares to do it. But he had a significant number of shares. So he was an activist, and there are lots of activist organizations around. So if you can find the ones that are, active on particular companies, it might be interesting to see how that impacts their share price. One of the problems you might have is that those companies are likely to be larger companies, and they're likely to have significant institutional investors who may not be influenced by the shareholder activism. But on the other side, there are cases where the companies have, the larger investors have forced companies to take particular courses of action. So for example, in Australia, there's a large retailer called Myers. It used to be a large retailer. I think it's suffering now with online competition. And the major supplier of clothing to that company was also on the board of directors. And the fellow that owned the logistics company that did the transport of all this stuff was on the board of directors. And the institutional investors said this is not proper practice, that you can't have somebody of that influence on your board of directors. How can you expect your employees to negotiate effectively with them? So they force them out. So there are those instances, and the interesting thing would be what the activists are looking for in terms of response from the company. So, but I think it's an interesting area. You might also consider what hedge funds do to companies in terms of their activities. So there's a company called Blackwater in the US, and what they do is they do significant analyses of companies that they think are not behaving correctly. Then they short those shares and publish their report, and usually it results in a dramatic drop in the share price. So they make good money doing that. So they're using a profit incentive motive to actually affect the behavior of firms that are performing badly. So one good example of that was the company listed on the Toronto Stock Exchange. It was called, I'm trying to think of it. It was Sino Forest Investments, and that turned out to be a Ponzi scheme. It was a company that was the darling of the stock exchange. It was a company that supposedly had forests in China and was selling wood, and the whole thing was a sham. They didn't own any property in China. They didn't have any trees, and they never made any sales. But for 10 years, they had false accounts that made them behave as if they did. And it was this Blackwater investor investigating hedge fund that found those errors. So it would be interesting just to do a study on companies that they've invested in and see the impact of having a group of people that are prepared to call out bad behavior and to make a profit on it. I'm sorry about my background. It's my chair. I have this gamer's chair because in an online environment, I found my back was breaking, and I bought this chair that's a big black chair. It disappears behind me, but it's the one that gamers use, the guys that play video games for 6 or 8 hours a day, and it's just wonderful. But it does make the image in the background a little bit questionable.
Okay, well, thank you so much, Professor Ray, for your answers. So I think we've come to the end of this session. I hope that, Prof. Ray talk has inspired you to, kind of like conduct this this kind of analysis in your study. And I think this is kind of like the right time, right? If you're talking about like government policy, government intervention on businesses, this is probably will be like a good year for you. And since last year, I meant, to figure out like what will affect the market, how market reacts to a lot of like government intervention or even some of the policy that's being conducted by firms. So I would like to thank Prof. Ray again. So I believe we all here have learned a lot from you. Hopefully there will be papers, ideas, dissertation that come from today's talk. Thank you so much. I also want to thank all the audience for your participation, for the questions. And I know this is probably not enough. Maybe Prof. Ray will, will be kind enough to visit us again, maybe someday in the future, and, spend more time with us, and we will be able to discuss more things with Prof. Ray. So thank you so much. And thank you again to everybody. So I'll give the time back to the MC. Rani, thank you so much.
Thank you. Thank you very much. And just send me an email if you want to discuss something or have something, have me send you something that I might have. Thank you.
Thank you so much.
Thank you very much, Professor Ray McNamara, for your very insightful lecture on event studies, and also Ibu Dr. Yulianti for moderating this session. And also to the participants for the lively discussion that we had. Ladies and gentlemen, we will move to the next session, which is paper presentation from Universitas Indonesia and from Sunway University, Malaysia. The first presentation will be delivered by Mr. Imade Pradana Adiputra from Universitas Indonesia, and the session will be moderated by Dr. Jasapi Singh Joginder Singh. Before we proceed, I would like to introduce Dr. Jasapi Singh Joginder Singh first. Dr. Jasapi Singh Joginder Singh obtained his PhD in 2013 from University Science Islam Malaysia. He has lecturing experience in INTI International University, Nila University, and Taylor's University. Currently, Dr. Jasapi Singh Joginder Singh is an associate professor at Sunway University Business School, and his research specialty is in the area of integrated reporting, climate-related financial disclosure, and accounting ethics. And we also would like to remind that the time limit for the presentation is 20 minutes and for discussion is 10 minutes. Ladies and gentlemen, without further ado, I would like to invite Dr. Jasapi Singh, Joginder Singh to lead this session.
I thank you very much, Madam MC, for my kind introduction. So, and welcome to the symposium that we have today. And without further ado, I think I would like to call upon the presenter, the next presenter, Made Pradana Adiputra, to present his topic of today. His topic is on the effect of implementation level of management control system, enterprise risk management, and misfit with contingency factors on financial performance. So I would just like to remind the presenter that the time given to you is about 20 minutes for you to present. And after your presentation, then there will be some question and answer session. So thank you very much. So I will pass the floor to you, to the presenter, to continue with your presentation. Thank you.
Okay. Thank you, Mr. Jaswal Singh, and thank you for the first opportunity given to me to present my paper as part of my final project at program Pascasarjana Ilmu Akuntansi, Fakultas Ekonomi dan Bisnis Universitas Indonesia. Okay. Okay, my paper is entitled "The Effect of Implementation Level of Management Control System, Enterprise Risk Management, and Risk with Contingency Factor on Financial Performance." Before, thanks for the support, my promoter and co-promoter, Ibu Ansela. Thank you for your support. Yes, this study aims to analyze the effect of management control system and enterprise risk management and several contingent factor on financial performance. Several previous studies tend to analyze each system, both management control system and enterprise risk management, and their influence or impact on performance and the determination of factor that influence management control system and enterprise risk management practice. Okay, management control system is a framework that includes the process of planning and organizational control framework for managing the company business strategy. Martin et al. State that levels of control or ROC by 7 has been widely used in research in the field of management control for more than 2 decades, and that's why I use levels of control to proxy management control system in my research. I think, okay, LOC studies for main strategic variable, its core value, strategic uncertainty, risk to be avoided, and the performance variable contained in its LOC. That's why I combine with risk, because talk about boundaries, there are risks avoided to support the level of control, then belief, diagnostic, and interactive. And yes, this why about the management control system, antecedent performance, management control system, and risk. This is management control system design must consider the risk faced by the company that will have an impact on performance as suggested as and I follow Mike's Soin and Collier, Red, Edip, and Zeng. Management control system collaborate with enterprise risk management. The management control must be enriched by exploring enterprise risk management. Okay, why MCS and ERM? Okay, follow Bromley explained that analysis in accounting and finance research is often mathematically complex, but it's not clear to most manager and his limited application in field outside accounting and finance. Research focuses on determinant of ERM implementation and analysis of the impact of ERM on firm performance, which provided mixed result, the impact of ERM on shareholder and firm value. And this is a previous study in my research. I'm used the previous study to explore my research question. Okay, previous study on ERM with management accounting and management accounting system. Previous study on risk and management control system. And why management control system and ERM? Because about cost and benefits. ERM require investment. The organizational control system is sponsored with the identification, assessment, and management of the risk portfolio faced by the entity in relation to the achievement of its goal and objective. Okay, previous study and current research. Previous study, management control system, antecedent and performance using both contingent and non-contingent approaches. Previous study ERM, determinant, impact on company value and performance. Previous study about contingent factor used tend to refer to Chen Hall research, and there are external environment, technology, organizational structure, company size, strategy, and national culture. And current research, I'll try the investigating the effect of management control system, on financial performance, ERM, the effect of ERM on financial performance, joint implementation, integration of management control system and enterprise risk management, follow Mike's 2009, Soin and Collier, Reed, Edip, and Zhang, using a contingency approach in addition to following Gordon, external environmental factor, internal corporate culture. The impact of accounting system for both management control system and enterprise risk management in the integration pattern is well analyzed on financial performance, using the mixed approach to the research model as a step in hypothesis testing. Okay, I'm go to my research framework. This is my research framework to hypothesis 1, hypothesis 2, and hypothesis 3. This is as integration, joint implementation, management control system, and enterprise risk management on effect of the management control system and enterprise risk management on financial performance. I hope this is my research novelty. Yes, and I hope management control system and enterprise risk management have the impact of financial performance. This is my hypothesis 4 and 5. Contingent factor, external factor, environment uncertainty, and corporate culture. I analyze this with residual analysis to get a fit and management control system and enterprise risk management impact on financial performance. Okay, this is my hypothesis development 1. The level implementation of management control system affect financial performance. This is my hypothesis development 2. The level implementation of enterprise risk management effect of financial performance. Hypothesis development 3. The integration of management control system, levels of control, and enterprise risk management affect financial performance. Hypothesis development 4, misfit contingent factor. environmental uncertainty and corporate culture with management control system will negative effect on financial performance. And hypothesis development 5, misfit contingent factor, environmental uncertainty and corporate culture with management with enterprise risk management will have negative effect on financial performance. My population, research population, non-financial company in the form of limited liability companies, or in bahasa perseroan terbatas, listed on the ADX in 2019. My sample, this is studious uses all member of the population and active status in stock trading. On the IDX will be the research sample. The research sample is non-financial company listed on the IDX in 2019. On probability, I get a response rate 118. Respondent of this research are the board of commissioner, director, audit committee, and managers unit of analysis firm. Okay, my research use survey method. I hope this my survey methods is the novelty in my research, but several study enterprise risk management use secondary data, and I get the very difficult to respond rate and the questionnaire to proxy enterprise risk management, and I hope this is my novelty in the research. Okay, I go to operational definition, management control system, dual control, boundary control, diagnostic control, interactive control, variable measurement using 18 question item adopted from Bedford, enterprise risk management. This study was measured using 18 question item adopted from Bremen, 2018. Environment uncertainty adopted from Luwak and Borisov. Corporate culture using OCAI instrument. Organizational culture assessment instrument adopted from Cameron and Quinn. Financial performance adopted from Bedford 2015. And this is my empirical model. Hypothesis 1, hypothesis 2, hypothesis 3, hypothesis 4, hypothesis 5. Yes, this is my hypothesis testing 1 in linear regression test result. So that the level of implementation of the management control system of system pengendalian management has a positive and significant effect financial performance. This proved the support for hypothesis 1 of this study. The level of implementation of management control system through lever of control, which include belief, boundary, diagnostic, and interactive control in the company, has been implemented properly and effectively so as to improve financial performance as well. Okay, this is hypothesis testing 2. So that the level of enterprise risk management implementation has a significant positive effect of financial performance. This proved empirical support for hypothesis 2 of the study. In other words, the company has implemented risk management practices through effective risk management to improve financial performance. Okay, hypothesis testing 3. It's my. I hope this is my novelty. Interaction, integration, management control system, and enterprise risk management. Based on the table 4, the joint implementation, integration testing of management control system and enterprise risk management prove that both can improve financial performance. That's the result of this test proof that there is a joint implementation or a joint application of management control system and enterprise risk management in the firm. Both are complementary in the application of management control system and enterprise risk management practices in supporting financial performance improvement. Okay, this is hypothesis testing 4. I use residual analysis to get misfit value from step 1, linear regression in the model management control system, because this linear regression to get residual value, and residual analysis in analyzing the fit or not of management control system to the absolute residual value to get the effect on financial performance. And the step 2, residual regression, expectation sign negative, coefficient negative but not significant. Okay. Now, based on table 6, proof that the absolute management control system variable as a result of calculating the residual value of the contingent factor on management control system, so that the result do not have a significant negative effect on financial performance. This empirical finding proof that the implementation of management control system is not entirely dependent of this contingent factor. In other words, the company only focuses on the effectiveness of the implementation of the management control system itself. Okay, hypothesis testing 5. Step 1, regression linear enterprise risk management, in environmental uncertainty and cultural corporate culture to get misfit value to go to step 2. Misfit value not or effect on financial performance, and result absolute enterprise risk management, expectation set negative, coefficient negative but not significant. Yes, based on table 8, it proved that the absolute enterprise risk management variable as a result of calculating the residual value of the contingent factor on enterprise risk management, so that the result don't have a significant negative effect on financial performance. This empirical finding proves that the implementation of enterprise risk management in company does not depend on this contingent factor. In other words, the firm only focuses on the effectiveness of the implementation of enterprise risk management itself. Okay. This is conclusion, implication, and limitation. Okay, conclusion, the result of the study proved that the level of implementation of application of management control system and enterprise risk management has an effect of improving financial performance. There is joint implementation of management control system and ERM in company. In other words, but complement each other in supporting the improvement of financial performance. The result of testing the effect of misfit on contingent factor with the application of implementation of management control system and enterprise risk management are not able to prove fit that both management control system and enterprise risk management are not able to prove fit neither as SPM, system management, or management control system, nor enterprise risk management depend on contingent factor to improve financial performance. Limitation, I think questionnaire response are still minimal and respondents have difficulty accessing according to the email address in the ID expect book. I think that is pandemic factor. The use of research instrument, namely questionnaire, requires a more comprehensive review and evaluation and obtaining understanding and answer by respondents so that they are in accordance with actual condition in the company. Additional testing has not been carried out by analyzing the implementation of application of management control system partially on its level, including belief, boundary, diagnostic, and interactive control system in the continuing factor suite analysis on the application of management control system, which in the main analysis is still the combined value of the 4 levels. Okay, thank you, Mr. Jaspal Singh. To our audience, I apologize for my limitation in English. Thank you.
Thank you very much for your presentation. First of all, I'd like to congratulate you. Very good presentation. And you have come to this stage. It's quite impressive work you have done. So I would like to just make a few comments, and then I will open the discussion for the rest to make any questions. Then we can perhaps get some answers. First of all, I would just like to confirm you have 118 respondents, as you mentioned, right? May I know how many companies exactly that you have approached to get this 118 respondents? I just repeat my question just in case you didn't hear me the first time. You said you have 118 respondents.
Yes.
May I know how many companies you have approached to get that 118 respondents? Because your respondents are from different backgrounds, right? Some are CEOs, some are managers, some are the audit committee and all. So may I know how many companies all in you managed to approach to get that 118 respondents?
Okay, I will send the questionnaire to the respondent through email or link questionnaire, and this is my difficult to get response rate from 118 respondent, but I will try to through via contact number or email to get the response, and so this is my difficult to get to respond rate from the top management, like board of commissioner, board of director, but this or from the respondent to get my response from the board of director or audit committee or manager, but not from the 1 or 2 from board of commissioner. And this is my challenging to collecting data from the questionnaire.
Okay, all right. Yeah, thank you for your response. But I mean, I guess the thing I wanted to check with you is that the number of companies that you have approached in total. I know you each company perhaps you have got some of them maybe they were managers and some of them were CEOs or from the board directors. So I would just like to know further about in total how many companies were there that you managed to approach to get that number to 118. Because 118 are companies, right? 18 is the number of respondents. The reason why I'm asking the question is one is to get the proper diversity of companies in your study, that you cover different sectors throughout the stock exchange in Indonesia. That's one. Number two is that I just wanted to also share with you that sometimes when we get respondents who are managers, they might not have privy to certain information or or certain details that the CEO or the board of directors might have. So in terms of level of information might not be similar. So when you have respondents, because your respondents are quite vast, you have CEOs in the C-suite, you also have the board of directors as well as managers. So manager can be, someone might not be very specifically knowledged about the ERM and also the other functionalities that you have. Okay, that's one part of my question. ERM and also the management control system. Not every manager will have access to that information. So their response to you might not be rich. So that's something I just want to highlight, that you can use that in justifying your respondents better. Moving on, just to highlight, I believe you have also addressed that in your presentation, but just to highlight one part, I would like to share my screen based on your the document that I received about your presentation. I will just share my screen. So I believe you'll be able to see the screen here.
Yes.
Okay. So over here, you have mentioned that they are all together. Just 1 minute. So you have mentioned that under the management control system, the levels of control, you have 18 questions in total adopted from Bedford in 2015. So consisting 4 items here that measure the intensity of using beliefs control. Then you have 5 questions that comes to, am I looking at the correct one? 1 minute. This is page 26. Just give me a minute. I wrote that somewhere, and I'm not getting it. ERM, under ERM, yeah. So under ERM, I think the number of the question doesn't tally. You said that this study used 18. You got 3 plus 4, then plus 6 plus 5 plus 5. This number is already 23 here, but here is stated 18 question items adopted, but in total it comes to 23. So I would just like you to look into more detail about the instrument that you have used, so to make sure that whatever is claimed from the source of the questionnaire that you are adopting is exactly the same as what you have used to get responses from the respondents. Okay, that's about that. Another thing that I would like to check with you also is that this is just based on my reading. Perhaps it's just a typo kind of thing. That's the second part I highlighted. The next one is about the hypothesis. It will take some time for me to go through that, but just to highlight that 2 of your hypotheses in your write-up here is actually the similar ones. So I guess that might be just an error in this typing. I guess that you can just go through yourself on your own. There are two hypotheses actually that are exactly the same, which is highlighted in your write-up. The next one I would like to see look at the model though. Looking at the model, but this is just a suggestion. You have your way of looking at it. I just want to see whether this might work or not. But if you look at this model here, you have hypothesis 1, 2, 3, and 4 and 5. Actually, these two models can be combined as one. If you look at the constructs, you have management control system here, you have enterprise risk management, and you have financial performance. The constructs are, or rather, your IV and DV are the same. So one thing I would like to suggest, if you think it's viable to do so, it's just a suggestion. It's up to you and your supervisory committee to look into it. That you already have.
I'm sorry to interrupt, Dr. Jaspal. I'm sorry to interrupt your discussion, but the time is already running out. Thank you.
Okay, all right. So, okay, if that's the case, then I'll just end up by saying that you will just might want to look at the model. You might want to combine it together. That's one suggestion. Otherwise, everything seems to be okay. No further comments from me.
Okay.
All right. So I would like to, since the time is already over for this presentation, then I would like to just pass it back again to the MC to continue with the next presentation. Thank you very much.
Okay, thank you, Mr. Jaspal Singh, for your advice and correction.
Sure,
thank
no
you.
problem. Thanks. Most welcome.
Thank you very much, Dr. Jaspal Singh, for leading this session and providing input for the paper, and also to Mr. Imade Pradana Adiputra for presenting your paper. We are sorry that the time is really limited. Now we are going to move to the second paper presentation for today that will be delivered by Ms. Mira Iswaran from Sunway University, Malaysia, and will be moderated by Ibu Dr. Sylvia Veronica Siregar from Universitas Indonesia. First of all, I would like to introduce Ibu Sylvia Veronica Siregar first. She is a faculty member of Faculty of Economic and Business Universitas Indonesia. She teaches several accounting subjects such for undergraduate and graduate programs, such as financial accounting theory, corporate governance, and accounting research method. Her research interests are in the area of financial accounting and corporate governance, and she has published several papers in very reputable international journals, such as the International Journal of Accounting, Journal of Cleaner Production, Mandatory Accountancy Research, Social Responsibility Journal. And without further ado, I would like to invite Ibu Dr. Sylvia Veronica Siregar to lead this session, please.
Thank you, Rani. Good afternoon, ladies and gentlemen. Okay, so for the next session, we will hear the presentation from Ms. Mira Iswaran. Hopefully I pronounce your name correctly. Her paper titled Blockchain Governance and Accountability and Accounting Perspective, because we have quite limited time for each session. I will ask Ms. Mira to present her paper maximum in 20 minutes. Maybe Ms. Mira, you can start to share screen.
Sure, no problem. I hope that you guys can hear me clearly.
Yes.
Thank you very much. Thank you, Ibu Sylvia. Yes, and to the moderator, and I would like to thank the university, Sunway University, and Universitas Indonesia for this opportunity. All right, I'm just about to share my screen. Yeah. Okay, so before I move into my slides, I would like to first share a few things. So, yeah, just All right, and I'll go to presentation mode. Okay, I hope that you guys can see my slides clearly.
Yes, it's perfect.
Okay, thank you very much. Thank you. Okay, firstly, I would just like to introduce myself. I'm a doctoral student of Sunway University, and I'm a student of Prof. Susila. And I've completed my proposal defense in September last year. And at the moment, I'm working out my amendments and also working towards my data collection plans. Yes, and I would like to just inform and share that the topic of my PhD is looking at real-time financial reporting, okay, in the time of blockchain technology. So what I'll be looking at is to present financial reports, financial statements using blockchain technology as a platform. And the title of my presentation for today, which is looking at one of the objectives of my thesis, my study, which is understanding the accountability and governance of blockchain technology in the context of financial reporting. And it's purely a qualitative study. And I'm looking at this as a systematic literature review that I have done in collecting my information for my proposal. And I'm happy to share with everyone today what my findings are from the literature review. So welcome everyone, and thank you for being here with me. And firstly, I would like to share the analysis of my paper, the aim and analysis. So the main aim of my paper is to propoundly go through a thorough analysis, a circumspect analysis of governance and accountability factors in blockchain technology as a use case in financial reporting. So I just want to to emphasize here that what I'm doing is actually using the areas in a blockchain technology, the trait in a blockchain technology, mainly consensus-based verification, one of the traits, to look at effective financial reporting. And it addresses the current issues that are faced in financial reporting. Yeah, so the analysis uses articles and journals which summarizes the uses of blockchain technology and how it will actually streamline an effective accounting process. And the paper also discusses how this technology will be governed, specifically as the technology, the use of blockchain technology increases and reaches critical mass. So throughout the paper, criticisms on blockchain and its use cases in other fields will be raised to address the concerns of the widespread use of blockchain in accounting and finance. So I reviewed 18 journal articles and also 6 articles from professional bodies and Big Four. And the flow of paper that I have prepared will be starting off with an introduction. I will talk about blockchain and blockchain technology in the paper, and the characteristics, the 4 main characteristics of a blockchain, the traits that give it the governance and accountability factors, yeah. And blockchain network governance, which is the validation process of a blockchain, and limitations within a blockchain and using a blockchain, and also the security factors that have been embedded within the blockchain technology, scalability, privacy leakage, and selfish mining. Yeah. So many of you would have heard of the term blockchain. Okay, it may not be something which is new to you. We all know that blockchain is one of the disruptive technologies in accounting and finance. Okay, but many of you would relate it to Bitcoins because blockchain essentially was the technology that was used behind as a base for Bitcoin transactions, cryptocurrencies, right? But when Satoshi Nakamoto, 2008, when he wrote his paper, within his paper, the importance of blockchain and how it has a lot more potential, and it actually can be the new era of how we actually perform transactions in the future. All right, so using this factor, I was actually very interested in blockchain and how it could actually help and assist with the current challenges within accounting and finance. And that actually triggered the interest to find out how we can use blockchain technology beyond Bitcoin. Yeah. Blockchain is basically, as what I stated here, what it is and what it allows us to do. It's distributed ledger technology, and it has a lot of traits which enables decentralized transactions and trusted data in the process. And it uses a cryptographic analysis, an algorithm, a cryptography, a hash function to allow each participant on the network to manipulate the ledger in a secure way without the need of a central authority. Yeah, so this was stated by individual from Ernst & Young. Yeah. And the overall benefits of blockchain technology in accounting is actually providing technological replacement of trusted party and a need to verify transactions by offering what we know as a triple entry ledger system, or we call it triple entry accounting, and it provides authenticity and transparency in all transactions. This was stated by Dai Wasserhelli and Yermak and O'Leary in 2017 and 18. So just depicting a picture of how blockchain has its various uses and also what its functions and its traits. So you have like trust, mining, wallet, use in networks, different networks, and how it actually helps enhance the trust factor, right, in businesses. So the first trait that I talk about in my paper is on immediacy. Okay, and immediacy refers to the trait which is known as consensus-based verification. So one of the traits of one of the areas within consensus-based verification, which is proof of network, which is a fundamental area within blockchain technology. And a good consensus protocol actually guarantees fault tolerance level. Okay, it reduces and it guarantees that there should not be any fault, and it reduces the level of fault, and it increases your level of trust, yeah, in security in a blockchain system. So this was stated by Zhang and Li in 2019. The second characteristic within a blockchain is immutability. Okay, and the ability of a blockchain ledger to remain unchanged, for a blockchain to remain unaltered and indelible. Yeah, the data in a blockchain, once it has been transacted and it has been hashed, it will pass on. Okay, and it cannot be altered. Any alteration or attempt to alter will ignite a message throughout the blockchain, and it will indicate that an attempt has been made to alter this information. Okay. Next is data protection. So due to its nature of decentralization within blockchain, transactions and data are not verified and owned by one single entity that are in a typical system. Okay, so the validity of transactions are confirmed by any node or computer that has access, okay, to the network. Yeah, so towards data protection. Yeah, so you don't need a centralized method of protection. Okay. Then you have what we commonly call DLT, or decentralized ledger or digital ledger technology. So a ledger can be distributed in distributed ledger technology, yeah, via a platform called smart contracts, via a private group of users that is connected via a local network and with a lot of individuals, thousands of individuals over or across the internet. Yeah. So a smart contract is one of the areas, what are the proponents and what are the strong areas of the use of blockchain, and it has actually saved a lot of time, a lot of cost, and increased efficiency and effectiveness in terms of transacting. Yeah, a message is relayed on the creation of every new block, okay, in a decentralized ledger technology system to ensure that all users have a latest version of the ledger. So this is the areas which actually contribute to the real-time factor of a blockchain. Yeah, the areas that actually contribute, towards real-time factors are actually the trade consensus-based verification, and it's supported by the 3 other traits. Now, why is it so important to have real-time information? Is it can aid in quick decision making. It can also help in verified information that can be discussed in real time. Okay, and it can also help assist many different levels of stakeholders in terms of helping them in deciding and helping them ease their job, okay, and whatever areas that they are actually working towards, and whatever roles and responsibilities that the stakeholders have. Okay, it can be individuals who are preparers or users of financial reports. Yeah. So the limitation and within a blockchain that I have identified in my paper is about 4 limitations. I'm sure that with the more use cases of blockchain, there are more limitations that we can find and address. All right. So a popular limitation is the 51% attack. Okay, and what we use within the consensus-based verification as a proof of work protocol. It happens when one entity actually manages more than 50% of the transaction of the area, right? Of the transaction on the blockchain. It actually gives too much of authority, and 50% of the hashing power is given to one entity or one individual. So there is a risk of dominance, yeah, in this area, and it can actually alter the blockchain. Yeah. Then you have data modification. Now, one of the benefits becomes a challenge actually, because you're unable to modify any data. So even if you are not putting in wrong data, but you are actually putting in data which you made a mistake basically, and you want to correct it. It's not that you're putting in doing something fraudulent or anything, but you just want to correct a wrong entry or wrong data. You cannot modify it. Yeah. Private keys. If you're given a private key, and you don't remember, or you don't remember your access or your login, and all data is actually, your access will be lost, and you won't be able to participate completely. So I think this is one of the challenges of Bitcoin. Actually, if you lose your Bitcoin password, you won't be able to access your Bitcoins, and the Bitcoin is completely lost. It won't be able to be accessed by anyone after that. Yeah. So storage is another problem. Even though we are finding many new ways of storing data, all right, it still occupies about 200 GB, which is what Bitcoin is occupying right now. So hopefully in the future, these areas or limitations can be addressed, all right, and we can find ways of using blockchain in a more efficient and effective manner. So I am ending my slides here, but I would like to share with you my framework. If we still have time, I would just like to share my framework and with you guys.
Thank you very much for
you.
the presentation.
Thank you so
it's
much.
Very interesting. Okay. I noticed that we have a question in the chat, but before that, maybe I have several things that I want to discuss with you. But maybe it is the version, your paper that was given to me. Maybe it is not the most updated one, yeah, because I noticed that the title is not exactly the same with the one that you put in your PowerPoint. Maybe you have revised it a little bit, probably.
Sure. Yeah, I guess. Yeah, I'll check on that definitely.
Oh, okay. Okay. So there are several things. First of all, I think this paper, the topic is very interesting. It is very relevant with the most recent development in technology and the relationship with accounting. You have discussed about the blockchain, and maybe the first thing that I want to ask is regarding the originality or the novelty of the paper, because in the version in your paper that that I got a few days ago, I noticed that you have not addressed the novelty explicitly, because there are several recent literature that also discuss about the blockchain technology and also the relationship with accounting and auditing and finance. They also discuss about the literature review as well. So maybe you can also explain a little bit about the novelty in your paper. That is the first one. And also the second one, I also noticed that you have discussed several literature, but based on your references, I noticed that the most recent ones are those published in 2018. But you have not included the ones published between 2019 and current year, in 2021. Maybe you can also explain about that as well.
Sure.
And then you also mentioned that you have included certain literature. I forgot the exact numbers, 18 or 16, if I'm not mistaken,
Yes, the papers, about 18, I think.
18,
Yes.
Okay, maybe you can also explain the criteria that you are using, that you use when you are selecting those literature. Maybe you have several criteria. For example, maybe you all already have a list, the names of the journals that are related to blockchain, or you also consider about maybe the impact factor or a certain database, for example. Okay, and then in the result section, I think it is will be more interesting if you have added more discussion related to blockchain governance. And I don't know, maybe can you also add another discussion as well on the maybe role of regulators on this issue? And then another one is because you are talking in the context of accounting and finance, specifically maybe, for example, in financial accounting, what do you think are the impacts of this blockchain application in the financial accounting context, for example, on auditing profession, on external auditors? Okay, maybe that's all from me.
Sure, thank you so much. And I think I also see some comments on the side, and some of it are similar to Ibu's comments. So I will, address them. Okay. So basically, one of the challenges that I face with blockchain, finding articles about blockchain is there are not that many articles that are available out there in terms of articles and also journals. And of late, of 2019 and 20, as Ibu mentioned earlier, there has been more of it, and some of it are prepared in the areas that I've worked on when I was doing my proposal defense. So I agree with Ibu that it needs to be updated to more current areas. So the reason why I chose 18 articles from journals is I also use journals which are related to like supply chain management, the use of blockchain within healthcare, voting process. These are the areas because the governance, like voting process, it had more information on governance. Okay, because the the nature of a voting process, governance is really important. So there were a lot of data that I could get from voting processes using blockchain technology. Yeah, even real estate transactions and so on. Yeah. So the 6 articles that I used from the Big Four and areas and all were actually like Pricewaterhouse, Ernst and Young, okay, these companies, the Big Four companies, and also the professional bodies such as ACCA, ICAEW. Okay, the first article that is on blockchain was back in 2013, okay, and 2013. And that started building from there in terms of using blockchain with different areas like big data and together with AI and machine learning. All right. So there was no specific numbers that I had chosen in terms of this, but I did use Scopus database and Wiley, okay, for Kakan's questions, and also the keywords that I used were blockchain, technology. I started off, of course, to understand the meaning of blockchain technology and all that. Yeah. So I started off with blockchain technology, and some of the other keywords that I used were accountability in blockchain, governance in blockchain, and supply chain management. Once I went into supply chain management, then I started taking up more keywords from these areas. So it was a challenging process of looking for information. And I do agree that the last 1 to 1.5 years, there have been a lot more areas coming up, specifically in accounting and finance within these areas. Yeah. And for the question on impact, yeah, I did look for impact factors. Yeah, Ibu's question on impact, the impact of blockchain in accounting, and that is where when you talk about regulators, I found the document on the conceptual framework of financial reporting addressing the challenges, and blockchain was actually one of the remedies or one of the suggested solutions to solve like single source information, to solve real-time information, accurate real-time information. So using this, I actually developed, my objectives towards my PhD program, and I've been working on literatures in this area, and also for the question on the originality and the novelty of information, there are very limited, like as I said, publications. So I also did look, what actually ignited me was a lot of survey responses on the users, yeah, of the survey responses, and these are some of the areas. So these are really some points that I can take on to improvise my paper, and also build a stronger literature review, okay, and with a more critical stance. All right. And yeah, I think I'm pretty much about addressed. If unless I'm missing out anything still, Ibu, you could highlight to me.
Okay, I think there are additional questions for you in the chat. For example, there are questions about differences between blockchain and relational database, and then there's also a question about the framework that you are using. So it is can be used to understand better about the relation between blockchain and accounting, and then also a suggestion to follow Prisma guideline, and also question about ethical governance such as COVID. Yeah. Maybe you can provide a quick response to these questions.
Sure, I'll address them. So I'll take the first one after the Dr. Kakan's one. I have one from Yusuf. Allow me to ask regarding control in accounting information system, will be any differences between using blockchain and relational database in segregation of incompatible duties in computer-based accounting information system? I would say an accounting information system is more of a software for accounting. When I was actually doing my literature review, I did like a whole study from the most basic areas within accounting, like accounting history, right up to the evolution of financial reporting, basically, of how we are where today. So I went through that. I went through XBRL and everything. And of course, software is more of we have a lot of control over software. Like if you say there are two authorizers, there'll be two people to authorize a transaction, there'll be two people. If there's one person, then there's one person. Whereas a blockchain, I would say compared to a relational database is more, I would say a more matured technology, because it does have a lot of functionalities of its own of fraud prevention within accounting, of enhanced internal controls, of good a lot of traits which is self-controlled by the blockchain itself, rather than areas within the software itself that needs to control. Yeah, and definitely I'm going to project the framework for Yasin after this. Just in 2 minutes, I can show you the framework, and I can also share with you, no problem. I have my number and name on the first slide, my email address. You can always contact me as well.
Maybe you can contact you directly,
I think,
about the
yes,
framework,
different reporting items. Sure. So I will definitely share. And allow me to ask any considerations to apply IT governance in COVID. I think considering this, there will be a connection of how DLT to financial, definitely, because I would say blockchain is a technology, and of course, IT governance is it's very strongly a strong proponent of how technology is maintained well, and how technology is properly governed. Because so I think some standards, okay, some we really, I always keep asking this in a lot of talks and conferences that I attend myself. I keep asking about what are the standards that are going to regulate, who's going to come up with these standards. If it's accounting, is it going to be a pure accounting standard, or is it going to be a general regulation over blockchain? And then you have the breakdowns within the all the industries which are using it. So definitely consideration of applying IT governance COVID is definitely an area which should be considered. And
I just got a notification.
Thank you so much, Shazwan. Yes, just in time. And Shazwan, please do send me and be in touch with me. I'm going to share my email address here.
Yep. Maybe if there are more questions,
and so that
they can send it directly.
Yes, and I would love to collaborate with anyone who wants to work together on this very thriving, exciting area. So if anyone would love to share, and thank you for the Prisma statement. I got your link as well on that.
Okay.
And that's my email address right there. Please get in touch.
Okay. Thank you so much, Ms. Mira, for the wonderful presentation. Okay, because our time is up now. Thank you so much for all the audience for attending this session. Okay, Rani.
Okay.
Thank you.
Thank you. Interesting paper. This was a very interesting session, and sorry for the unanswered questions. I believe you can contact Ms. Mira directly for further discussions. Okay, we want to move to the third paper presentation for today by Ms. Wery Andriani from Universitas Indonesia, and will be moderated by Dr. Hakan Najaf from Sunway University Malaya. First of all, I would like to briefly introduce our moderator first. Dr. Hakan Najaf is a lecturer of accounting at Sunway University, Malaysia. He obtained PhD degree in 2020 from Taylor's University, Malaysia, by availing of the fully funded scholarship. And before joining Sunway University, he served at the University of Lahore as a senior lecturer for 5 years, and he is an active researcher in fintech, ESG, sustainability, and empirical methodologies with contribution appearing in 12 international ranked journals, and he is also serving as a reviewer for leading ranked journals. Without further ado, I would like to invite Dr. Hakan Najaf to lead this session. Thank you very much.
Thank you. Thanks a lot for the introduction. First of all, I'd like to thank you to give me this opportunity to be the discussion of this conference. And without any further ado, I'd like to introduce Ms. Henry to present her topic on the effect of family ownership on the firm, the role of professional CEO. And you have 20 minutes to present your topic.
Thank you, Mr. Hakan, for the opportunity. I would like to share my screen. Okay. Okay. Good afternoon, everyone. Before we begin, let me introduce myself. I'm Mary Andriani, a postgraduate student from Faculty of Economy and Business, Universitas Indonesia. Today, I'm going to talking about the effect family ownership on firm risk, the role of professional CEO. Next. Let's start with introduction. In emerging market, family business plays an important role in economy. Classen 2013 said that many companies in developing countries are controlled by family, especially in East Asia and Southeast Asia, including Indonesia. Laporta 1999 said that one of the uniqueness firm in Indonesia is that the majority firms are controlled by family. There are many factors can affect firm risk, such as ownership structure, corporate governance, and board diversity, as well as CEO characteristic and compensation. Recently, research focused on whether family firms are risk taker or risk averse. There is two perspectives can explain that: agency theory and socio-emotional theory. In perspective agency theory, family firms are more strict and careful. In line with this argument, Mark Aniel 2003 said that sometimes the family as the controller will not make a certain innovation to protect the investment that has been done before. Or we can say they are more conservative than non-family firms. Thus, the new project with return are uncertain will not be selected. In other hand, based on socio-emotional theory, Gomez Mejia said that family firms do not always avoid the risk. In line with this argument, Sun, Lee, and Pan 2019 found that family firms prefer to invest, which was reflected in higher R&D expense compared to non-family firms when the recession happened. In this view, we can see that the family firms are more tech risk. Besides ownership structure, the CEO characteristic can also affect the firm risk. Usually, family companies are led by management who come from the family. However, sometimes family firm require a professional management to lead the company. We believe that the relationship between family ownership and firm risk is weak when the firm has a professional CEO. A professional CEO can play two roles in family firm, especially related to firm risk. When the family firm tend to be risk-taking, then non-family CEO can resist this behavior. According to the stewardship theory, which emphasizes that management who are trusted to operate the company will be responsible for their position. Thus, the management will not approve decisions related to the project or too risky. So, as equity differs, CEO has influence on all decisions in the company. So in this research, our research gap is research about the relationship between family ownership and firm risk has been widely studied. But in this study, focused the moderating effect of professional CEO on this relationship. There are two contributions of the research. First, this study is expected to be able to fulfill the existing gap by providing the empirical evidence, especially related to the firm risk in Indonesia. Practically, this research is useful for investors who want to invest by looking at how family companies manage the risk and whether the status of the professional CEO can affect the firm risk. For the literature review and hypothesis development, to explain the family firm, we can use two theory, socio-emotional theory and agency theory. Gomez Meja et al. 2007 said that family firms do not always act to avoid risk. Sometimes they can take the risk when it comes to family work. They found that family firms are more likely to prefer performance hazard than venturing risk. They will perceive family control even though the result is a decrease in performance. This is because the family firm will continue to keep the family well, such as identity and reputation. In line with that, Lee et al. 2018 found that risk-taking behavior in family companies is influenced by ownership. Chun and Lee 2017 found that concentrated shareholding, usually family, will encourage management to take the risk. So in this theory, there is a positive relationship between family ownership and firm risk. And based on agency theory, Laporta Lopez 1999 argued that companies that are controlled by family tend to be careful in making decisions and choose to avoid the risk. In line with that, Mark 2003 stated that sometimes the family as controller will not make a certain innovation to protect the investment that has been made previously. In this view, family firms tend to risk averse. As explained before, we developed our first hypothesis is family ownership influence firm risk. In moderating role of professional CEO, it can expand with two theory, agency theory and stewardship theory. Dispersion between ownership and management often lead to conflict of interest and raises agency problem. Agency problem type 1 occur in firms. So because the management has different interests from the shareholder, such as if the family firm tend to maximize firm value through the risky project, professional CEO can prevent it. In other side, based on the stewardship theory, manager who have given the mandates by the owner to manage the company will show that they are about to carry out the responsibility properly. So the agency problem type 2 can solve because a professional CEO appointed to serve the interests of our shareholder, not just majority shareholders such as a family. Thus, the professional CEO will be more careful in taking risky projects. We believe that the professional CEO can weaken the relationship between family ownership and firm risk. So, our second hypothesis is the presence of professional CEO weakens the relationship between family ownership and firm risk. So this is my research framework to test the relationship between family ownership and firm risk, and as well as professional CEO as a moderating variable. So to research method, research design for this study is quantitative research. The population is all manufacturing firms listed in Indonesia Stock Exchange between 2015 until 2019. To determine our sample, we choose purposive sampling with criteria firms have financial, accounting, and stock return data between 2015 until 2019. Finally, our sample includes 72 firms with 360 firm years observation. To collect the data, family ownership and professional CEO, we use hand collect from annual report and prospectus, and for financial data we collect from Thomson Reuters. To test the hypothesis, we use panel data regression. We use two models to test the hypothesis. First model to test the hypothesis 1, and second model to test the hypothesis 2. The dependent variable is firm risk. In this study, we use total risk as measured by calculating standard deviation of weekly stock return for each fiscal year. And then the dependent variable is family ownership, as measured by the percentage of family ownership directly and indirectly. And for the moderating variable, CEO professional CEO, we use dummy variable value 1 if the CEO is not family member or professional CEO and 0 otherwise. And we use 4 variable control like firm size, leverage, growth, and market to book ratio. This table 1 is statistic descriptive. In this table, you can see that firm risk as a proxy of total risk has an average value 0.057 and the standard deviation 0.33. Meanwhile, the average family ownership in manufacturing companies in Indonesia is about 26.9%. About 50% manufacturing companies are led by professional CEO. And table 2 show that the pair correlation between a variable. There is no correlation above 0.08. It indicates that there is no multiplanarity problem on this data distribution. And this the main result of regression. Based on this table, we can see that hypothesis 1 is supported. There is a negative relationship between family ownership and firm risk. This result indicates that hypothesis 1 is supported. In line with this research conducted by Abizano et al. 2020, who found that there is a negative relationship between family firm and ownership and default risk, which is the result of risk taking. This indicates that family will try to keep the sustainability of the company for a long term by not taking risky project with uncertain return and can lead default risk. This result confirms that family-owned companies tend to avoid risk in order to keep family well. This result different with Lee et al. 2018, who document that the amount of family ownership determine risk behavior. When the family control more than 50%, they will tend to more willing with firm risk because the alignment between family goals and company goals. If the holding are low, it tend to be risk averse. And then hypothesis 2 is supported. We can see that professional CEO weakens the relationship between family ownership and company risk. This proves that when the majority family companies choose to avoid risk, the CEO who are required from professional will act more rationally. They will encourage the company to increase from value by choosing the new project that can provide more benefit in the future. This result consistent with Kang and Kim 2016 in their research on Korean family companies. They found that when the firm value decreased, the Korean family companies initially led by the CEO from family decide to replace their CEO with professional CEO. The aim is to restore the company performance while exploiting the minority shareholder rights. Then the conclusion, in Indonesia context, especially in manufacturing sector, family firms tend to avoid risk. Consistent with agency theory, which argues that company owned by the family will act more conservatively to protect family wealth, we found a significant negative relationship between family ownership and firm risk. In addition, we also found that a professional CEO can weaken this relationship. This is consistent with the stewardship theory, which assumes that the CEO who appoint to operate the company will give his best to fulfill the interests of shareholder. So when family firms tend to avoid risk, the professional CEO will encourage the company to invest more and finally can get more return in the future. So for the limitation for this study, first, the sample of this research only manufacturing firms, so that the result cannot be generalized. Second, the supporting information related to indirect family ownership is not available for all companies, so that so that some companies are not known as family or not. That's all for me. Thank you.
Thank you. Thanks a lot. It was well presented. You complete your presentation in less than 12 minutes. So it gave me almost like 18 minutes to be a discussion. There are few questions. I like to come to this question a little bit later on. I have my own comments on your paper, which I like to share. I have almost 38 comments on your paper. So I like to get started with, if any question is left, then I think that I will come to the audience. But I will make sure that I also finish within time. So I start my stopwatch. Okay, first of all, the paper is very exciting. I really enjoy reading it. I sit on Sunday, and the paper simply says that there is a relationship between the family firm and the waste. There are many studies which has already been done, but the switching point, the selling point for this paper was that they introduced a concept of professional CEO with an interaction term, with a moderating effect, mediating effect. So this makes me more interesting to read this paper. The study is interesting because there are two theories which are competing each other. First is the stewardship theory, which say when the professional CEO comes, he will definitely reinforce the whole structure. Whereas the agency theory say that no, the CEO will weaken and he will become the part of the directors and will not helping the risk and the family firm relationship. So this is the overall view of the paper which I study, if I'm not wrong. Now, my first comment, I will send you this file later on. The study claims that there is a new phenomena that the professional CEO weakens the relationship between the race and the family firm. However, the prior study discussed this already. I have this paper, Zara 2005, and afterwards there are many papers in the context of this CEO being professional and the relationship interaction. So this study needs to address the question, so what? Means what is new you are offering? Whenever I write a paper or I come with some idea, I always ask myself a question. If I do not do this study, then what will happen? Like what is new I'm giving to the audience or to the reader? So this so what question bothers me a lot when I was reading this paper, and I find like, okay, this study already been done, and this study already been done in Malaysian context, so I don't think there is furthermore new gap has been identified. So I try to build some gap of my own for this study as a suggestion, which will improve this paper maybe. The gap is missing. It's more interesting to add the gap in the introduction part. Also already build up some argument. This study has built some good argument based on Laporta's study in 1998. I'm a big fan of this guy. He studied 48 countries, family firms, out of which he talked about the Southeast Asia. And it was also cited in my paper also, in my thesis. So what you can do, basically, you can mention why the Indonesian is so important based on his study, which you already did, but you need to elaborate a little bit more. Additionally, the author can provide a list of studies relating to the underdeveloping countries. Like you can give some Malaysian example, Indonesia, Malaysia, Thailand, which are underdeveloping and they have this family issue. So that's why maybe you are doing this. And then you bring this important gap of the role of professional CEO, which is very much important. So after building up the case, then you can say, okay, for example, our CEO being professional is important in Malaysian context because of this reason. I did this paper word by word, and I did not find any gap, especially in the introduction part. So I think it will be encouraging to add just one paragraph in the introduction to, write some motivation why you do this. Second is the relationship with the literature. You have two hypotheses. First hypothesis is between the risk and family firm. Second hypothesis is between the risk and family firm with the interaction of CEO. So when you develop the first hypothesis, I find your studies, just 2 studies of them. You have only 7 studies. You cited only 7 papers. to develop your first hypothesis. Out of that, only 2 are between 2017 and 21. Remaining are far before that. So the literature is not so much, updated one. And also the first hypothesis, they stated that since the literature related to the risk of the family farm in Indonesia is still difficult to find. It is not difficult to find. You can still find it on the Google Scholar. There are several papers which is available. So this is a wrong statement as per factuals, because most of the work has already been done in this topic in Indonesia, while even addressing the family farm and the risk. So nothing new. That and also cited this verse. I just Googled last night. I can find this verse. So you need to change the statement from developing the first hypothesis. Second is therefore encouraging. Then I write some comments, and also the teacher indicates the relationship between the risk and family. You mentioned the same regardless of the direction. Yes, this was my issue. That you say your first hypothesis that there is the influence of family farm on the risk, but you do not mention what is your argument. Like you are saying, family farm increase the risk or family farm decrease the risk. I, as a reader, do not know what is your argument of the paper. If there is a family farm, it might increase the risk. And when the CEO comes, it weakens this relationship. I can understand this. But your first hypothesis, that was the argument. The argument of the first hypothesis is missing. And eventually, it will take off my interest of reading the second one. But second hypothesis has only 4 references, just 4 references, and those are all before 2017. So none of the literature is related in first or second hypothesis. And I will encourage you to enhance your literature part, because I calculated your number of words from the introduction to conclusion is less than 5,000. Normally, we in journals, because I'm the editor of a few journals, so I believe that 8 to 10,000 limit is quite big. So below 5, it's kind of a short case study, but it cannot constitute as a paper. So you can add in some words into your literature, which is very important. Now, the major concern is about theoretical background. In introduction, the authors mentioned that they are following the agency theory and social emotional theory by well. But when they are developing the second hypothesis, the authors stated their study argument is based on keyword leadership theory. So I don't know, I'm still confusing which theory this study is actually following. Whether I follow what you write into the introduction part, or I should follow what you write into the hypothesis. So you need to be very clear what exactly you are following, which theory you are following, and you really support it. If you ask me, I would say you are following the stewardship theory, because your second hypothesis says the CEO will work for the interest of the shareholder and he will deepen the relationship between the family farm and the risk. So you are following this one, as per my perception. Okay, then I have methodology issues. Methodology, we have several issues. First of all, this study used a proxy for CEO. And you can see the proxy is professional. They give a value of 1. If CEO is CEO who is not a family member or professional. So you have 2 conditions. First, either this one or that one. So I can understand this whole study is about professional CEO, right? So if a person is not a professional, but he is not a family member, also you give a value of 1. So it is a wrong proxy to use, or you have to change the upward story, because when you use a person who is not a family member and he is not a family member, that proxy will not work, because he used or, not and. It is because if you use and, then he needs to fulfill the both conditions. So we can say it is a non-family member CEO or professional CEO. So you are using kind of a 2 proxies. So your whole story actually do not support when you use a proxy. You are using a non-family member CEO. You are not using a non-professional or non-professional. Yeah, you are using maybe some of the cases, But when you write this proxy, yeah, this is kind of a triggering that this proxy is not actually the supportive of a professional CEO. Then you use just 4 control variables, which is quite less. It should be less, not less than 8. There are many other variables you need to, some level variables you need to control. Why you use just manufacturing firms? A little bit motivation into the introduction part will be supporting. You have total 360 observations for 72 firms for 5 years. And you have, if I see your descriptive table, the very first table you presented, you have these 360 observations in all over the variables, which cannot be possible. There must be some value because not every fund can introduce every control and the major variable, all the information. There are some information. So you need to check your data whether you miss some information and you just type 360, because it cannot be possible that 360 observation is available for all the controls and the main variables. This I already addressed the proxy use. Yeah, the fixed effect. Your Fanuka model using fixed effect because you are using a panel data. Panel data you are taking for 5 years, so you need to control for the fixed effect of the year. And since your control variables are too less and you don't want to add any more, so what you can do, you can create a fixed effect for the firm level also, because you can create a dummy for every firm fixed effect. These 2 things you need to add in your economy model. Otherwise, good journals will not take because of this fault in the, maybe they can sacrifice a little bit on the argument part, but for the methodological part, they have a strict policy. They will get a depth of rejection maybe because the economical model is not good. Then you need to add an Impairment in the end, where you mention all the variables and tell a very very sophisticated way that you're presenting your variables. Then my issue is number of observations. It is 360 and it's just for manufacturing. I think you can take enhance a little bit more industrial and increase the number of observations if possible. Then your study do not have any robustness test. This is no go. We cannot, any journal cannot accept a paper without a robustness test. Robustness test means maybe change from the pooled regression to quantile regression or GMM model. Then the biggest issue, the indemnity. Whether your firms are affecting, the family firms are affecting the risk are affecting the firm. So indemnity issue is there and there is no test which your study has. Then your study does not have any prospect like nearby you can show the scale, but that was missing. Okay, then I have an issue in our conclusion. Let me show you if you can see my screen. Okay, how to remove this conclusion of the study. Where is the conclusion? Okay, this is the conclusion. Not this. Okay, in the conclusion, as you can see, your firm, total number of firms. In the research model, you have 72 firms, and the sample is 360, which I agree. Which every page or data analysis is showing the same. But if I go back to the conclusion, I don't know. Also, sudden you change based on the sample of 541 public Indonesian firms for 5 years. So it must be a typo. I'm not saying that you write. It must be a typo. So I think it's better that you do read this paper. Especially this fact, the facts you provide is very important because they are very eye-catching. So there is a typo mistake which I just show you. And limitation you can provide. You have a limitation in data because you have less observations. You do not write that limitation. Whether it is a useful implication of the study, yeah, implication of study was well written in the conclusion. Then quality of communication. Normally, I do not have like too much time to read like word by word, but I try my level best. It was very hard to read, to be actually. And what I do, copy from the abstract to the conclusion and I paste in my Grammarly premium. And what I found is your study is 81% score. 81% score is not bad, but I think if you are going for the journal publication, it should be more than 95%. So you need to improve the write-up. I provide few references. Also, I checked the plagiarism. Plagiarism show 14% only, which is quite impressive. I think you can reduce it to less than 10%. It will be encouraging because nowadays journal has a policy to have, like a good journal has a policy to have plagiarism less than 10%. And I took 15 minutes of your time sparing some time for the Q&A. My question, okay, first question is, I'm reading the question out now. Okay, for our understanding in the Indonesian nation, the term CEO and the managing director is similar or different. So this is the first question to you by Muhammad Shazad.
Dr. Hakan, sorry to interrupt. The discussion time is already running out.
Oh, okay. I'm sorry. I thought I'm going behind that. It's okay. I think I can send my comments to you. I will email it along with the plagiarism report and everything. And I think this paper is good, has a potential. I would say best of luck in publication. Just you need to improve one time. And for the comments, I think you can forward it to Ms. Perry. All of you who is writing the comments in the comment box.
All right. Okay. Thank you very much, Dr. Kakanaja, for leading this session and for your thorough input for the paper, and also to Ms. Weri Andriani for presenting your paper. We are very sorry for the unanswered questions. Ladies and gentlemen, we will put the link to attendance list and short questionnaire in the chat box. So make sure that you click that link and fill the short questionnaire regarding the events. And ladies and gentlemen, I hope that you are still excited for our final presentation today that will be delivered by Mr. K.S. Kuldeep from Sunway University, Malaysia, and will be moderated by Ibu Desi Adaryani, PhD from Universitas Indonesia. First of all, I would like to introduce Ibu Desi first. Ibu Desi Adaryani, PhD, is a lecturer and a researcher from the Department of Accounting, Faculty of Economics and Bisnis, Universitas Indonesia. She holds a PhD from Victoria University, Melbourne, Australia, which was funded by an Australia Award Scholarship. She has been actively involved in several research projects on sustainability, accounting, ethics, and gender, and most of them are taking multidisciplinary perspectives, and has attracted several research grants, namely from the Indonesian Ministry of Research and Higher Education, CIMA, and Universitas Indonesia. And we would also like to reminder that the presentation and discussion time limit is 30 minutes. Without further ado, I would like to invite Ibu Desi to lead this session. Thank you.
Okay, thank you, Ms. Rani, our MC. Yeah, it's already 16:17 here, yeah. And this is the last session with Mr. Kuldeep, yeah. He will present his paper about whistleblowing. I believe this is a structured systematic literature review, and Kuldeep is a PhD student in Sunway. You have 20 minutes to present your paper, and then I will follow with the discussion review. And the audience, if you have questions, please feel free to write your questions in the chat. Okay, thank you. Kuldeep, Mr. Kuldeep, you can start your presentation.
All right, thank you very much. Just get my screen up and running. Can you just confirm if you can see my screen?
Yes. Okay.
I just switch to slideshow. All right. So thank you very much. Very good afternoon, very good evening to all of you. It's a real pleasure to be here. First of all, I hope everyone is keeping safe and keeping well in these very difficult times that we have. The topic that I'm going to be talking to you about is part of my research journey that I'm doing with Sunway. And the focus of my subject is on whistleblowing. And today I'm going to be talking to you about the literature that I have looked at. And I think the time period of 1970 to 2021. So here I would like to make just the first qualifying remark. Why take 51 years to look at the literature? Well, there are 2 points. The first is that I believe this gives a very sufficient time to see how this subject has grown and how it has moved over the years, especially now when we have the internet coming on board as well, and that implications that it has on whistleblowing. Second, and I think the most important reason for picking such a long period of time is that it's been 51 years, but we still don't have a solution of how we can actually make people who see something that is wrong, that they observe something that is incorrect, and they don't come forward to bring it up in the matter of the adequate time. And people are very, very fearful. So there must be something that the literature can tell us. And this is what I'm going to be talking to you about today. All right. So let's begin first by talking about this term, whistleblowing. When we say the word whistleblowing, every one of us probably has some form of memory or some form of recognition of this word in our daily work life, or something that has happened to us in the past, or something that we have seen or read. But it is deviant behavior or a fact. Now, while it is something so simple as that, what I found very interesting out of the literature review is that most scholars don't tend to agree on one common way of looking at it. Although a lot of people have accepted one definition from 1984, but there continues to still be variations and changes in this definition. So what I've come to a conclusion is that we still lack technical connotation and a unanimous legal definition around this word. And this definition is very critical because now we have got the online and social media that has come onto play, and that is also causing a challenge, as I will explain later, in terms of how we define whistleblowing. Reasons for this study. Well, many studies have gone before me that have already looked at literature review in as far as whistleblowing is concerned, and I've looked at all of them. But what I found very interesting was that not a lot of studies have actually spent time to really build a taxonomy of the studies itself. They have authors have actually given their own classification or categorization, but it's without a very thorough a detailed analysis of coding, for example, in terms of coming up with that kind of grouping that they have. And the reason why this would be important is that it can show you the areas that has been focused, the areas that's not been focused. And for anyone who's interested, you can apply this when you're doing your future reviews. Secondly, when people also look at the past literature review, I've also noticed that a lack of attention has been given to one particular area, and that's theories. The underpinning theories actually for whistleblowing. It's been oscillating, meaning that it's been moving from one area to another area. From every kind of theory that you can think of, from a justice theory, a power theory, a theory of planned behavior, all these theories have been applied one after the other, but nothing has been accepted as uniformly. Finally, there's also a very strange absence in terms of how research has been done in this field. Because you have to understand, whistleblowing is a very difficult area to do a research in. It is not something that organizations would be very, very willing to come forward to disclose this information to you. The only things that you get to see or hear or read are those that become sensationalized and that end up in the media. And a lot of times, the past research that I've looked at have actually looked at the whistleblowing from a very quantitative approach, using a lot of questionnaires, a lot of theoretical ways in terms of how intentions are actually done. And this kind of defeats a lot in terms of us being able to understand, what can we do in this particular area. That's the reasons for this particular study so far. So what did I use? Well, I applied the Prisma method of gathering the data, looking at the information, because I find Prisma is a very good systematic way of how you extract data, you filter the data, you look at the data sensibly, and then you come up with the final number of papers that you actually find is relevant. And if you need to do an additional addition to that, you can also do that as well. So I found Prisma is a very interesting paper. Although it is something that was premised in the healthcare, it is applicable in the social behavior studies as well. And what systems did I use? Well, I used two. I used ProQuest as one database, and I also used the Harsing Publish and Perish. For Harsing, I used the Google Scholar as well as Scopus databases. So why did I do this? Why do I go to so different kinds of groups of things? First is because I want to make sure that I capture as many papers that I possibly can. And the second is that the terminology for whistleblowing also changes from country to country, and is also a subject that gets infused with other kinds of studies as well. So it was very important to be able to have a very thorough net that's cast out, to look at all the papers that we have. Now I want to share with you some of the results of what I've seen. When I did a table of analysis from 1970 until 2020, I noticed that from the periods of the time of 2013, there seemed to be a large escalation of the numbers of papers that were being published with whistleblowing. And here I use whistleblowing where it appears in the title of the article itself. So you can just imagine, just in the title itself, you can see already such a surge of interest. So I went to investigate why was there such a surge of the papers in this particular time period, and that's when we can find that it comes from some of the healthcare issues that were occurring in the UK, especially during the 2013s. It's also occurring because we continue to hear companies failing, lots of things that are done that are really, really horrible. You even have things like the Volkswagen case that happened. You also have Olympus in Japan that happened. A lot of monumental company failures still occur, even though we have got the learnings and the warnings of Enron and World.com. Companies still do the wrong things. And finally, we've got people like Julian Assange and even Edward Snowden that have also come onto the scene. And these gentlemen have actually challenged, our understanding of what actually is whistleblowing. Another name I just want to call out at this stage here is also Bernie Madoff. So Bernie Madoff is a very interesting gentleman. The person, Harry Markopoulos, was a person who went to the SEC 3 times to warn them that Bernie Madoff was doing something very wrong, and 3 times over 3 different people refused to listen to him. So a lot of interest has garnered around the failure of people to listen. It's garnered around what should we be doing around whistleblowing itself. And what I've realized from that also is that when you look at the journals where they are published, you will find that from these 9 journals that are published here, cumulatively, they stand for 25% of all the papers that were published from 1970 to 2021. And you will now begin to see a lot of emphasis on healthcare. And now with the COVID situation, this is not actually going down, this is actually increasing, because a lot of governments are actually trying to censure a lot of our healthcare people from actually coming forward to tell what's the truth that's actually been happening in their localities. But when you take a step back and you look at the whole picture, you ask yourself, so what's common in this past work that has been done? You will realize that most of the work has been focused on trying to create what I call as building up the whistleblower goodwill, which means that we are trying to approach this problem by looking at the person, by asking the person, how can we make sure that we encourage this person to come forward? What can we do? What situation should we do? What law should we pass? So that's what has been driving a lot of this. And so when I collected these results, I was able to build a taxonomy of the 10 areas that I feel would properly address this. But before that, how did I build this? Well, I looked at over 1,500 papers and I took all their search terms that they had. And from their search terms, I built a coding system from level 5 all the way up to a level 1, where I built and I represent it. And I found that they actually talk in one of these 10 areas. What are these 10 areas? For the last 50 years, this is what whistleblowing has concentrated on. First, they have concentrated on the individual. the person. They've looked at the behavior of the person, the characteristics of that person. Second, we've got a lot of researchers who've come up with lots of models, concepts, theories, a lot of things that have been very, very theoretical. And not a lot of these have been empirically tested either. Then you've also got studies that voice or employee silence perspective, because whistleblowing is considered as an employee voice aspect of it. You also have studies that were focusing on a particular area that is called conflict. And this conflict arises because it could either be the duty of that particular person, especially if you are an auditor, if you're a company secretary, or it could be something that arises because the company takes retaliatory action against people who do whistleblowing. It also talks about, do you need to have identification protection? Do you need to protect whistleblowers? This has all been very, very much discussed in a lot of these studies as well. Another area of studies that I have grouped are those that concern about policies, legislations, regulations, codes, and international guidances. Now, this is a very technical area because these are areas that can approach from laws that have been passed. For example, in 2002, you have the US Sarbanes-Oxley one that was passed, or you can have the UK Public Interest PIDA Act that was passed, or even in Malaysia, the Whistleblower 2010 Act that was passed. And you can also see that there have been a lot of codes that have been affected by companies. These are usually governance codes that have been introduced. And in the corporate governance codes, they have various provisions that they have put in to talk about whistleblowing. And you also have regulations that talk, for example, the listing requirements of companies that are making sure that you incorporate corporate governance principles, and that includes even whistleblowing. International guidances is a very interesting area because a lot of bodies have actually stepped up because there is a vacuum in terms of trying to address what is actually required when we talk about whistleblowing. And so they have come up with a lot of their own interpretations and their own positions on this. For example, Transparency International, the OECD, or even the ICC. Right? There's also studies that have been looking at whistleblowing more from an ethics standpoint, a cultural standpoint, religion standpoint, and even a morality standpoint as factors of morality. And as factors of motivators. So you even have things as far as learning the Confucius principles and applying them in this particular area, as well as you've looked at very strong religious views in terms of that driving it. Also the moral intensity that drives this. So these are value-based studies. Now, from an organization standpoint, of course, the key areas that always we studied is the ethical culture or the ethical climate of a company. And this talks a lot about the leadership, the tonality, the tone at the top of the organization, the tone even in the middle of the organization. And a lot of times the organizations have come under scrutiny in as far as what they do around whistleblowing. And this is very important, especially if I were to recall you back again to the Volkswagen case. It was a culture in the company that actually prohibited people from actually whistleblowing. The other incident that also occurred was in the Boeing 737 MAX, because there was also another culture that affected in terms of leaders do not want to hear bad news. Other studies have also applied whistleblowing in as far as it is used to study other areas. So these are where they have used whistleblowing as another platform to be used into the areas of corporate governance, corporate social responsibility, or even looking at other areas of like what do you call statement performances or financial performances of a company, and trying to relate or trying to see even the board's influence in as far as whistleblowing is concerned, or whistleblowing policies are concerned. Now, there's also been researchers that have also looked specifically at certain professions. So you've got a lot of studies that were very specific to auditors, a lot of studies that were very, very specific to doctors, even to nurses, even to students. And interestingly, you also have studies that's done on lecturers or academicians in the university, because whistleblowing in this particular area has a very different area of interest in terms of, when people see something that is wrong, what will motivate them to come forward to stand up to speak. And finally, you also have the use of whistleblowing today that is now growing and advancing in as far as the online tools are available. Now here it divides into a few parts. You can use whistleblowing as an automated way. You can use your emails, you can use hotlines, you can even use a certain, facilities that's made available for people to be able to report. There are some apps that are available as well. But at the same time, there's also whistle bots that can be used that actually are run, automated on certain, financial data to pick up if there are potential, whistleblowing aspects that could be picked up by the system itself or AI itself. And finally, you've got social media. Social media is now a great opportunity for them to take a handphone, take a picture, immediately post it onto the internet, and the news gets spread much faster than any news agency, and people are able to convey whether it's the right news, whether it's the wrong news. But that has now caused a lot of sensation for people and the problem of fake news or what's right news. And with the COVID situation, this area is now becoming to be a very, very difficult area for governments to regulate, or even for individuals to be able to navigate through. So these were the 10 areas that I had looked at in terms of the taxonomy from my research. What did I learn? Well, the first thing I've learned is that if we're going to do future research, well, what people could do is they could use this taxonomy to build and grow on the research areas that's already done before, probably by tying a few areas together and looking at them in one group, or by cross-examining and to see if there are any correlations. Second, there are a few emerging themes that are very new and very, very avant-garde at the moment. One is mental health. Now, mental health is a very easy word to use, but it's actually a very complicated term to understand. You see, when a person sees something is wrong that's happening, that person already begins to be in a very difficult mental stage because they are making a decision. Should I report? Do I have to report? What happens if I report? This puts a lot of strain on that particular person. And then when the person is making a decision to report, it even becomes more difficult for that person. And he again has a very strong mental pressure that goes on his head to say that, what will be the implications to my career? What is the implications to my job? What is the implications to my family if I were to come forward and report? Will I be ridiculed by the people? Will the press make fun of me? What would my life be like? And then you have people who have already reported, and the mental health of these people is also in a very difficult position as well. As you can see, what has happened to Julian Assange as well as with Edward Snowden, some of them have to, flee with their lives out of the country itself. And in the Malaysian case also, you also have people that have left the country because, that they have not been able to stand up to the mental pressure that occurs with it. Healthcare, with COVID, you can clearly see how data is being manipulated, or data is being restructured, or data is being rethemed, to suit a certain particular narrative. And that's a new area that's really, really coming up. The advocacy of online, this is where social media is being built. So from the time that we've had Facebook, where you can do live streaming, you can have a lot of things that can be done live. You can show the breaches. You can become a whistleblower virtually, literally online live with the data. So, the requirement for evidence now becomes an issue. When I looked at the literature as well for the last 51 years, there were a few gaps that I captured. And very quickly, I'm just going to go through them. One was looking at the policies and procedures. That was a gap. Not many studies look at that. There were not many policies looked at also on the competing side of it. And also, there's also a shortfall in terms of, having effective, how do we know whether we have effective policies and procedures? And I've also talked about, introducing a new theory to underpin the whistleblowing, as well as looking at the other areas of doing research. So that's the end of my presentation. Thank you.
Okay. Thank you very much.
I'll just stop sharing.
Yeah. Okay, thank you, Mr. Kuldip. Very interesting presentation, and also the topic is also, you have a thorough analysis. Yeah. Let me share my screen first. Okay, wait a minute. Okay. Oh, sorry. Where is that? Yeah. Okay. So thank you very much for the opportunity to review this paper. Yeah. First, I would like to emphasize the strengths of the paper is that it has provided a thorough review on whistleblowing literature, spanning a quite lengthy of time, yeah, from 1970 to 2021. And please treat these suggestions only for improvement, yeah, so that you can consider the suggestions for improvement. The first one is the technical aspect. First, prior to submitting to a journal, please check the requirement on the number of words, because I think that maybe the number of words has reached the maximum limit. So please just check it first, yeah. And then this is just a technical suggestion for you, yeah. Better to put this quote at the beginning of the paper. I think this is a very good quote, yeah. And then maybe it can motivate the reader to read more, yeah. And then for the originality, sorry, can you hear my voice clearly?
Yes, yes.
Oh,
Very
yeah,
clear.
yeah.
Very clear.
Yeah, because it's a bit echo here. Okay, for the originality, similar literature review papers do exist and have been referred to in the paper. Yeah. So I think that you need to sharpen the novelty claim because several systematic literature review has already address the novelty that you have claimed before, and I think that you have mentioned a more detailed reasons or motivations on the gap, yeah, in your PowerPoint. Maybe you can explore more and add it to the paper, yeah. And then please consider sharpen the focus on business context, because I saw that you also include the medical and science and engineering journals. Yeah, if you would like to add them into your systematic literature review, then please just provide a clear justification. Okay, and then for the relationship to literature, I think that significant and influential literature sources have been considered, yeah, including the updated one. For the 1970, I think you need to provide justification on why the review is started from 1970. Is there any particular whistleblowing activities from that time, or you feel that the literature on whistleblowing started to blossom in 1970 or something like that. And then for common theories, yeah, this is a very interesting point from your paper, yeah. Maybe we can consider, or please think again, do we really need a single umbrella theory, or you mentioned the integrated theory, yeah? Do we really need such theory like that? Because can we have a single theory for motivations, consequences, or do you mean a single theory for a single aspect, just for the motivation? And you also mentioned the OCB, organizational behavior or something, yeah, and organizational fear theory. Does it mean that we ignore the personal motivation or factors? Because if we take this organizational theories, then it means that we ignore the personal aspect of the whistleblowing motivations. So please think again, yeah, whether we really should suggest a common or integrated theory. And then for the methodology, I think it is very clear enough. You have mentioned that you follow the Prisma, yeah, and you also have presented clearly, yeah, and write it in detail in your paper. There are still some points that is still not clear here, for instance, and I think maybe this is very technical, yeah. For instance, the selection protocol mentioned the Asia or Malaysia geography, but the scope was not determined nor justified explicitly. And then you mentioned involving 43 articles, but they are not reflected in the result section. And you mentioned that a total of 1,429 papers, and then another 144. So maybe is there something wrong here, or maybe just a typo or something? And then also consider to compare the taxonomy from manual procedure with software results. For instance, you can use the biometric bibliometric tools or any software, yeah, just to see, because the software can group or they can group or analyze the group of keywords which has the relationship to each other, so that you can compare the groups taken by the classified by the software and your own manual taxonomy. Okay, and then for the results, I believe that results have been presented clearly and analyzed appropriately. If you you aim to publish in business or accounting journal, so please consider to maybe touch base on this on the business or accounting mechanisms to improve whistleblowing activities, for instance, management control system or risk management, yeah. And then also for the presentation of the results, for instance, in the theories or method, please consider to provide the quantitative measures, for instance, in terms of percentage, yeah? So that we can know how much research that has utilized certain theories, and how many research that has utilized a certain method, and then it will enable the identification of the gap in the theories and method. Yeah, and then for implications and quality of communications, because I mentioned previously about the need of or the necessary of the umbrella theory, single umbrella theory, then please consider to sharpen the theoretical implications. And I believe that your paper has shown a clarity of expression and readability. So I hope that the suggestions can help you in improving the paper further. Oh yeah, okay. I think there are several. Okay, is there any question from the audience? Yeah. I think this is from Muhammad Saswan. Thank you. Yeah. I believe you also had done some bibliometric analysis. Okay, using the published and Paris software. Also, maybe it is the right time for Malaysia latest Whistleblower Protection Act to replace current 2010. Okay, Mr. Kuldip, maybe you have response first from my suggestions and also from Muhammad Saswan questions and recommendations here.
Sure. Thank you very much. I really appreciate hearing from you. It was very, very nice to hear the suggestions that you made, and it's something definitely I will take on board to get this correct. That is definitely something I will do. I think I like the way that you have arranged the areas that I need to improve, so I will definitely do that. My thanks to you for that. In terms of the question that was asked in as far as doing a bibliometric analysis on this, yes, this is something I'm also working on, and it's also something I'm looking forward to working on to do. But when we talk about the Malaysian Whistleblowing Protection Act and the 2010, this is a very, very, how shall I say, controversial area. You need to have a lot of, a wider look at it, because the law itself in Malaysia right now is very limited. And I've read a lot of criticism about the law that we have today. Perhaps I will in future write a paper on that by itself. But for the research I'm doing right now, I think your points are very genuinely, and I really, really appreciate them. Thank you very much.
Okay, thank you. Yeah, other from Muhammad Saswan recommendation and question. There are no more questions, and yeah, I think you have been impressed with your paper and your presentation, yeah, and our suggestions can help you in your paper further. Okay. Thank you very much for this interesting session, and because of the time, I should return this session, this forum to our MC. Okay, thank you very much.
Thank you.
Okay, thank you very much, Ibu Desia Daryani, PhD, for leading this session, and for Mr. K.S. Kuldip for your very interesting presentation. Ladies and gentlemen, this is the final session for today. For those who haven't filled out the attendance list and the questionnaire, please do so. We have put the link in the chat box. And we are deeply sorry if you still have unanswered questions in mind, because we have a very limited time. But I believe that you can directly contact the faculties both from Universitas Indonesia and Sunway University Malaysia for further discussion. We would like to thank all discussants for providing the input. the paper presenters from Sunway University Malaysia and Universitas Indonesia and all the participants. And thank you very much for coming to the first day of Joint Accounting Symposium of Universitas Indonesia and Sunway University Malaysia. We hope that you can get some inspiration for your research from today's symposium session. And we wish to see you again tomorrow for the second day of the symposium, which will be starting off at 1 p.m. I believe before we close the session, is there any photo session or is there any words from Ibu Ansela or Ibu Yulianti before we close?
I think we may have a photo session, Rani.
All right. Okay, ladies and gentlemen, we are going to have a photo session together. Please turn on your video camera. Okay, we will wait. Mas Andi or Mas Heri, can you help us? Boleh bantu gak buat
Bu
foto?
Yuli also can help.
Okay. All right.
Okay, let me take a picture.
Okay.
So just based on Prof. Ray recommendation, so we should say money. Okay, let me count to 3 and then say money and then smile. And I'm going to do it 4 times because there's like 4
frame here.
Yeah, 4 frame on my Zoom. Okay, so let me take the first one. Okay, 1, 2, 3, money.
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 Okay, that's the first one. And keep smiling, everybody. 1, 2, 3, money.
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 Okay, that's the second one. Okay, and again, 1, 2, 3, money.
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 Okay, now this will be the last one for you to say money today. Okay, 1, 2, 3, money.
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 Thank you so much, everybody.
Thank you, Ibu Yuli. Thank you, everyone. See you tomorrow.
See you all tomorrow.
See you all tomorrow. Thank you.
And bye. See you tomorrow.
Bye,
See ya.
Prof.
Goodbye.
See you tomorrow, Prof.
Bye, everyone. See you later.
Bye.
Bye, Professor Ray.
Ah, you changed already.
Yes, I didn't think you'd be taking any more photos.
What time is it over there, Prof?
Okay, bye-bye.
Bye.
See ya. See everybody.
Bye. See you tomorrow.
Thanks, Rani.
Thank you, Bu Yuli, Bu Ansela. Thank you.
Off dulu ya. Bye.